Check it out. And now, back to the show.
What's happening, everybody? How are we doing today? Happy Monday. Welcome back. Let's bring up the chat charts. Here we go. So just doing some spot checking this morning. Have some trades running on SPX. Just need a little bit more. Maybe I can get maybe another 5 points bullish or just more time. Let's see what happens here in 5 or 10 minutes. But I'm getting close to break even on some of my trades this morning on SPX. Getting back to like 58.85, 5900 SPX would be perfect. Hopefully help me hit some profit targets here in the next maybe 10 to 15 minutes. I did post a trade last night. I got all my stuff set up in the new house, new office. It's still a bit of a mess, so we'll get it all organized hopefully over this week. But new trade for Pulver alerts, and that would be on the futures market. So if you take a look at the screenshot here, I posted this in ES. It's a skewed iron condor. So I'm selling calls at the highs and I'm selling puts at the lows. I'm looking to see if June is a little bit of sideways or actually going lower. That's kind of what I want to see, is if we have just a little bit of a pullback coming in June, kind of recenter this whole position. Max profit is around $300. Realistically, if I can turn that into $150 to $200 rather than waiting 60 days, I could get into this trade for maybe 20 days, 30 days, and take half the profit or more. Then I probably will. I don't really want to sit on this one the whole time, especially in the futures market. There's no assignment. If I did this on the SPY, I'd be willing to take assignments on the puts. But anyway, pretty good looking trade. I mean, I'm curious, like everyone else, like what's this melt up situation? I do wonder how slow summer trading is going to be. We probably have seems like there's never a dull moment 2025, but I do wonder what this month looks like. We do have some data coming this week, more rate cuts coming from currencies around the world. I think this week we have Bank of Canada on Wednesday. Powell speaks today at 1 p.m. See what happens there. Jolt's job openings for the U.S., but I think we have rate cuts for Canada on Wednesday. Yep, expected to cut 25 basis points. ECB looking to cut on Thursday another 25 basis points. So this should be Thursday ECB. Yep, another 25 basis points. Friday non-farm with U.S. and Canada having unemployment. All right, profit targets getting hit. Sweet. So now my daily profit play doing pretty well. Back into profit on all these positions. Hitting profit. This is good. Got to be close on all these now. Okay. Profit. 4 for 4 on the day. No big deal. 1, 2, 3, 4. Perfect. All right. Gets a quick update. Update 10:23 a.m. Eastern Time. Okay, trades are in. Some are getting more volatile than usual. Yeah, that's what I was just getting at. Is I mean, this first kind of pause is wrapping up in July, right? So I think like July 5th to July 10th. That's like our first 90-day pause window. So I'm curious, of course, like what does that end up meaning, right? I don't know. It could be a interesting June because nothing really happens. Maybe it's a very boring month. Maybe more developments happen. I mean, I'm curious. Okay, so we inked the deal in faith with UK. It sounds like Scott Bessent's been more vocal about certain things that we've agreed to with China have not been happening. So there's kind of that narrative going back and forth with how's this U.S. China trade deal going. I mean, again, it's so exhausting just even thinking about it. I look at it this way. I think we should have a pullback, and if we have one, great. Let me check in my Pulver list really quickly to see if I have any trades running on URA. Let's see here. Added ownership to the following symbols. Okay, looking for that one result. All right, so I did have a call option here. This one's been open for a while, so Pulver alerts from last year to this year. It cost me about, let me see what this trade was. I closed out some calls on URA, which is a uranium play. So I closed out $20 calls, $20 and $22 calls. So $20 and $22 calls, we had this huge move to the upside. The reason I wanted to get rid of the calls is because the trade's been open for 400 days. And when you think about, time is not on your side when you're in a long call. So, I mean, I did this out for 2 years. I'm doing the same type of thing on TLT right now. But a $20 call that's now, up $12 in real value. Guess what this is trading for? $12. So I don't really have, I get much less of the time premium in this trade. So I just took the profit. I paid $9 for it and closed out for 12. I'll take the win. I still have shares. I have like 400 shares of URA. So this stock, I mean, we've heard a lot of buzz going into like, okay, natural gas is going to be kind of the bridge for AI infrastructure. Nuclear is going to be the bridge for AI infrastructure. If we're going to build out all these things that the hopes and dreams of the future, all these crazy high profit margins, how? It's got to be technology. It's got to be AI driven, right? To do that, we need to have the energy capacity for it. I would say, I mean, China's doing it. China's doing it on coal and probably natural gas, probably nuclear. But I think we're just gonna have to up like all the power demands, which makes this all very interesting, right? So anyway, that could be a theme moving into the next couple of years. Utilities might not be a bad sector to play either. They're boring, but it could be something that does really well. If it's not picked up by the energy sector, you take one quick look at a trade this morning. I might get out of a small trade here. It's already down about 45 bucks. Are we getting to? Yeah, it's typical Monday. Let me see if I can get out of this trade here. So 14, I'm in for 1440. 14. So I get it for like 1450. Or 60. I'm going to try to get out of this trade for just a small $20 loss. Okay. So what else is going on? I want to talk just kind of big picture. Going back to the weekly time frame, we've now had 3 inside candle weeks in the SPX. So again, as we kick off June, we do have non-farm payroll this week. Something to watch would be this resistance, this support. I've noted the levels here around 59, 59.60. Like key levels to watch here: 59.60 resistance and 57.70 support. Right? Eventually, this market's going to have to go somewhere. So, I think the pain trade and the most frustrating trade for an investor would be more this with no pullback. I think the better trade would be let there be something, right? Let's get a little ventilation. Let's get a little pullback. Let's get something to kind of pop this melt up a little bit, giving investors a chance. I mean, heck, even giving institutional money that has not been participating in this. I mean, there's still $7 trillion on the sidelines. There's still the CTAs, and there's still money managers. There's still like nobody's actively buying this, except retail traders. I mean, it's been interesting. Like retail's been rewarded for buying the dip, and I think that's great. But I'd like to see this level still hold, offer a bit of a pullback here. I'd like to see this U.S. and China trade gap filled, because look, we're going to fill it eventually. It's either we go up to this level first and then we pull back, and I still think this is a reversal pattern. This would be a bullish pattern type move, right? But I think it'd be better participate in a move to all-time highs if we had a pullback first. And so here's exactly what I want to do. If we have a pullback into this US-China trade war gap, and it's not really trade war, it's more like US-China agreement gap, right? If we get a pullback, that's going to be somewhere between 3 to 5%. That 3 to 5% pullback, I'm going to start positioning for longs down here. So probably naked puts on the SPY, probably the Qs. I'm still selling calls on IWM since I'm doing that as a campaign trade since it's way less volatile. But the IWM unfortunately continues to underperform, and I think that's going to be the tone. I mean, everyone's talking about, oh, I think small caps will catch up. I don't think they will. I really don't. I think small caps are going to continue to underperform. I think that it's going to be all about the right now. It seems like we didn't even learn a lesson from this over concentration in a Mag 7. Companies that are willing to spend money and are spending money on AI buildouts, it's Mag 7. Mags has come back a long ways. It was down 30% and has come back to fight the good fight, right? We're down 30+%. We've actually made a more aggressive recovery. So from this low to high, I mean, it was up 37%. That's more than what the S&P did, right? Look at the Nasdaq. From this low, up 31%. So I mean, Mags even outperformed the Qs by 6 or 7% on the upside. Look at SPY from the lows. This was up around 23%, I think. 23%. So, S&P off the lows up about 23%, Nasdaq up about 30%, Mags up 37, 38%. So this to me is still, I hope we have a pullback. And if we don't, then I think we come up and retest highs, and then we still have a pullback. So I'm just, looking at ways to kind of position for longer term. I mean, I'd like to take some trades. If we get pullbacks in here, I'm going to start sprinkling in my Q4 entries. So if we get pullbacks in here, Q4 entries. By the way, let me ask really quickly to Julie. I think I need to ask a question. We're doing it this week, right? Let me just see here. Oh, okay. No, okay. Still got some time. All right. June 16th. So we got another week or so for kind of the halfway point of the year. Nick and I'll be running through some of our big plans. So I'm kind of giving a sneak peek to it. I'll build with the content for that. But look, I want to get positioned. I had some heavy trading through March and April. I've been enjoying the melt up like everyone else, but I have taken a majority of my profit, and I'm sitting here now over 50% cash, which I don't really love, but at the same time, I think I should. Like 1.9, I'm just going to approximate this, but divided by 3, 4, 8. So I'm sitting about 54.5% cash right now, which means I want to start trading, but most likely what I'll be doing is allocating at better opportunities. And to me, it just, I hate the idea that this thing might just melt up higher without me. But at the same time, it's that type of timing where it's like, if I start allocating now when we have a low volatility environment, there's nothing to stop this market from jumping back up, right? Like there's nothing to stop the volatility index from jumping back higher. In fact, if we sit here and like revisit the lows, or we get to retest all-time highs, and this is at a crazy low VIX, it's hard not to think we're gonna have some type of run to the upside. But we are still in kind of pure melt up mode. I just don't think it's led by broader market. Let's take a look at the this one, the 50-day moving average. Okay, this is S&P. How many stocks above the 50-day moving average? 70+% of stocks above the 50-day. How many stocks on the S&P are above the 200? About 48.8%, 49%. So we have stocks that are above the 50-day. About half are above the 200. Nasdaq, 78%. I mean, maybe this is the timing indicator. Maybe this is the timing indicator. If we start to see how many stocks are above the 50-day moving average, and it's up here towards these pretty important levels, like, oh my gosh, 90+% of Nasdaq stocks are above the 50-day moving average. Look at this on a weekly time frame. Would this not be a good timing metric from both directions? If we get up here when it's like 90+% of Nasdaq stocks are above the 50-day, it's probably a good opportunity to take profits. Number one, that'd probably be the most important thing, is take your profits, protect your profits, move your stop losses. Because if we hit this 90 to 91%, you can see over the years, it's equated to a topping pattern. there's been some pretty notable pullbacks or pauses or corrections in the market. So if we go to the S&P, same thing. We get up here towards like 90, 91%. Maybe that is the sign of a bit of a retracement. Make sense? Okay. So let's go. I'm going to get these updated for today. SPX. So 50 and 70. This is for $1.85. 125. 160. Again, I think I got these numbers backwards. So 50, 70. $1.60. Okay, so 50, 70, 45, 25. 50, 70, 45, 25. $1.85. 55, 45. $1.60. Got it. Next one, 50, 60. This is $1.25 and $1.40. Got it. All right. Just want to make sure these are all updated. I'm going to start getting some plans together. So with having 50+% of cash on the sidelines, I mean, here's what I'm doing. BIL, it's boring, but you get basically the mix of a US 3-month, which is sitting around 4.3%. So between the 1 month and the 3 month, all my unallocated cash is still getting about 4.1 to 4.3%. So even if I didn't do anything, having about 1.9, I mean, let's just throw it out there to say, like, look, I don't allocate it all for the next 6 months. Well, having that cash in the sidelines, 04, let's just say 0425. I mean, I could still generate probably about $40,000 to $50,000 because this is about the halfway point. So I did this till the end of the year, roughly speaking. I'd still make about $40,000 doing nothing, which is not my plan. Obviously, I don't want to do nothing. But I also don't want to invest when I feel like it's kind of a crummy opportunity, or I'm just going to wait for a pullback that either comes or doesn't. I mean, look, institutional money is probably going to want to buy the dip. They haven't really participated at all because it's safety first. And by the time they did anything, it would have been maybe in here. I mean, everyone thinks like institutional money is so smart, but their mandate is they like they have to confirm everything. It's like a 50-day and a 200-day. Look, they've got deep pockets. I'm sure there's ways that they were hedging in here to eliminate some of the downside. But there's just like all the signs of like the coast is clear. It's like we're hovering above this 200 moving average. That's fine. Okay, I would love to see this pullback. Just pull back to the 200 moving average. Pull back to the cluster of moving averages that were right here when I started taking profit just before that U.S. and China trade agreement. And that would be a kind of a strong level 1. So level 1 support in here. If we pull back deeper, we can pull all the way back, and I sound like I'm on repeat here, but we could pull back all the way into this gap. We could pull back. I mean, as long as we're not breaking, I can say, hell, we can pull back to the lows, and that's fine. But if this is going to pull back to 3 to 5%, I'm going to start positioning for, entries down below these lows. So options, right? My favorite strategy, a 1-1-1 strategy. If the volatility goes higher, as I especially like 1-1-1s, and volatility is up, and that way I could do a trade like this, where I basically put in a bear put spread here, sell a put, and collect some credit. And then in between here, it's a big profit trap. So if price just stays in the middle, I get a profit trap from this bear put spread, and I keep my credit. I don't get assigned any shares. I want to check the volatility index really quickly. So we're trading 17.4 IVX on SPX, NDX 44.5. It's way higher at NDX. The issue is I can't do an NDX. I'd have to do a defined risk trade. Let me try Qs versus SPY. So SPY is 18.3, Qs 19, Dow is 17, and IWM is 19. Ugh. So maybe the Qs. Maybe the Qs. I still want to see a pullback though. Right? We get a pullback here to fill some of this gap. Then the first thing I'll look at is, can I position for a 111? So here's what it's going to look like. Let's just say that right now I want to do this trade. So if I look at a new trade, I typically take these 111s out about 60 to 90 days. So if I did one right now to the end of July, that's 60 days out. So if I were to buy Qs and I wanted to do something like a 510 by 505, cost me $1.40 to make 357 bucks. But if I finance that trade, as long as I can find a naked put for $1.40 or better, and my Q's low is around 403, so I need to do like a 405 or 403. So I can do this, right? But look at going out 59 days. I'll let the option chain fill up here, but I'm only getting like $1. So I've almost got to be willing to say, look, for me to take this trade, I'm going to put in a 400 put and do 2 contracts. So if I take this with 2 contracts, that can't be right. I got to sell these. Sell 2. There we go. So if I did a 112, which I don't really want to do because that's on the hook for a lot of potential drawdown if we see a pullback, right? I mean, this is essentially me telling the market I'm going to buy 200 shares at 400. Now, the chance of assignment is slim to none. I mean, I've got a 99.5% chance of profit. But if the market drops, let's say, Q's at 519, if we drop to 480, that's a $40 move. That's an $8,000 drawdown just to make 60 bucks. So there's a lot of potential heat that I could take. So obviously, I don't love that trade. Now, I could, I suppose I could just sell puts, but still, it's like, I don't know. It's just not a good spot. I guess I'll look at it this way. If this market wants to keep grinding higher, fine. I'll be frustrated that we went all the way back to the highs again. But I think we could all agree here that if we do test these highs and there's not real bullish market breadth behind it, that this becomes a very easy target for bulls. This high, and then also having this discussion of maybe the markets go sideways. If this level rejects, we come back to the halfway point. How ugly does it get? Is 2025 going to be a year that we've had a 20+% correction peak to trough? Do we have another, 10, 15% correction during the same year? It's very possible. Lee, are you planning to open up another room? No, I've got a Telegram channel for that. So I'll just keep doing master classes, and I've got a Telegram channel for it. So we'll focus on that. Okay. All right. So anyway, just a quick recap as far as I'm trying to be patient. I'm not chasing stocks right now. Income trades that I'm generating money on every week. Russell, Tesla. I've got a couple accounts that own shares of the SPY. MicroStrategy, I've got expirations this week. I've had those out for a while, but the 627 expiration, I'll turn that more into income trades for me. I'm no longer selling calls in IBIT. I'm just going to add more in. I'm still waiting for opportunities, so I'll just kind of summarize this. So covered call campaigns, IWM, SPY, Tesla, and what else? MicroStrategy. Am I missing anything else? Those have been the primary ones. I need to still do some more work on TLT. I'll put here TLT. I'm actively trying to reduce exposure. GLD and SLV, wanting to add exposure. IBIT, wanting to add on pullbacks. new opportunities. I'm looking at 111 trades on SPY, QQQ, DIA even, with pullbacks and a bit of a VIX move up. What's that level? Probably the US-China trade agreement gap or lower, 3, 5, 10% pullbacks. Those don't deter me from being bullish in the market. So if all I'm doing right now is, generating trades here, looking at income opportunities, obviously that's what I can do is, income opportunities would be like the SPX grind. I usually grind on that thing every day, try to sell some premium. Also with hedges, there's a couple strategies that I'll talk about on June 16th when we run our little mid-year session. And then some swing opportunities. So anyway, I mean that's kind of the plan. So you see more details this spelled out in the next couple weeks. But I'm just being patient. And then unallocated cash is sitting in BIL, which gets about 4 to 4.3% annually. So even if it's the halfway point, I can generate 2.1, 2.2%. It sucks. Like that's nothing, but it's better than just having the cash sit there. So all right, let's go top down here. I think I have until about 11:15 today. Let's go currency strength. So today, relatively quiet for most of the currency pairs. We have CAD and dollar that are weaker. Bank of Canada looking to cut rates on Wednesday. Dollar continues to drop a little bit. What's happening to my euro dollar position? It's up about 250 pips right now. So it seems like even with the ECB cutting rates this week, if we get up to my profit target, it may be wise for me to take some profit prior to that ECB rate decision. So let's see if we hit our profit target around 115.50. And if that's the case, I'll take, I don't know, about, so 11, let's say 1150 to 15, that'd be 400 pips. So about 400 pips of profit here, and then I'll cancel and I'll see if I just reposition. If I want to move a stop loss, I can move a stop loss tighter, see if prices are going higher. But let's look at the dollar index. I'm just saying, like, I'm going to set a chart alarm at this low on the dollar. I don't think we go too much lower. I think if we poke those lows, it's a bit of a fake out. I'll set a chart alarm here. Lows around 98. I'll put a chart alarm around 98.15. So 98.15, and then close to lows. Yeah, we'll see. Right? So even if we were to poke those lows, I wouldn't be surprised if that's a poke with divergence and then the bulls start to pull back. Again, even if it's just a big range, I think everyone's talking long term, the dollar's doomed. It's like maybe it is, maybe it isn't. I think there's issues in the bond market if the dollar gets too weak. I think the current Fed, the current administration has to be aware of this. There are consequences for having a super, super terribly weak dollar. Right? So we'll see. But based on some technicals, we have a low, we've got some symmetry. I could see us coming down to like 96.50 or so. But I also see that after having oversold conditions with divergence, if we poke these lows again, that would be a perfect bear trap. We have a low. If we have a slightly lower low, but momentum disagrees with that, don't be shocked to see this thing pull back. Okay. Oil, you guessed it, still inside the same stupid circle, which is fine. Natural gas, I'm still long on natural gas, which I'm actively lowering. Let me see what UNA or UNG is. Let me go to my UNG positions here. UNG. Okay, so I am selling the $17 call this month against my $5 call, which is out to January. This is a diagonal spread. So overall, up about $1,200, almost $1,300. If it gets called away, that's okay. Let me do the math on this. So my debit on UNG, so my new debit price is 14.78. So 14.78 divide or taken away by 17, I make 222 per contract. 1, 2, 3, 4, 5, 6, 7, 8, 9. So times 9. So I make about $2,000 on UNG if it's greater than 17 by the 27th. If it is, that's fine. I'll just exercise these all together. So I'd have to take my, $5 call and my $17 sell call, put them together and close them because I don't want the broker to assign me on this, right? So anyway, that's going on in some natural gas. What else? Gold. Well, we'll see what happens on gold, whether this is a trend that is revisiting the highs. I still think this is consolidation. So, I mean, unfortunately, I didn't add anything. All this did was pull back to a 50-day moving average. So it wasn't really significant to me. So let's see if gold gets back to the highs, maybe around 35. If we're range bound between like 35 and 31, I'd still just use the support levels. I wouldn't be chasing these highs. I don't think we go too much higher necessarily. I still think silver's a better play. And let's take a look at silver. Yes. Yes, queen. Silver at 34 and change. I want to see silver break above these highs. If we break these highs, get into fresh highs, silver is open space trading above these highs. So I really, really like silver. Towards the 41 handle, towards the 48 handle, I probably could. I'll be protecting profits when we're at like 45 or higher. I'll be trapping my profits on silver. That's going to be the measured move that I'm in. So let's go. Let's see if we have the gold silver ratio is showing this a little bit better. I'd like to see this break. If gold versus silver heads lower, then that's probably a good looking sign for us to have silver outperform. Fill that pocket, fill that inefficiency, see if silver can outperform. Not bad. Bitcoin pullbacks expected. I mentioned this. We had overbought conditions with divergence. We're getting pullbacks. Not a surprise. I covered at 61 and change. I mean, if I wanted to be aggressive, maybe doing like a 63 or 64. I just don't think I'm going to get the premium for it. But let's have a look. So if I went out to this Friday and sell a 60, $3 or $64 call, I'm not going to make much for it. If I go out another week or so I can get like 11 cents at the highs. Highs are on 63.75. So if I do a 64, let's go out one more week. So June 6th, June 13th. Option chain's being a little slow today. DAX, we'll take a look there, Yoshi. Yep, just give me a sec. So I could do a $64 covered call for 29 cents. Now, it helps. I mean, I can lower the cost basis. Got a lot of shares of IBIT. So in here, I do have a pretty decent chunk of shares. If I want to grab an extra, let's say I get 30 cents on the 64. 1, 2, let me just add the numbers up here. I've got close to 2,000 shares of this. 300, 200. Okay, I've got close to 3,000 shares. So if I get 30 cents, I mean, I lower the cost basis by about $900, or I just add that to my income. I could make $900, in 2 weeks on just selling a call at 64. The problem is if we go up in price, I don't want to have to, I don't want this to get called away, right? Like I don't want to lose my shares. I want to see, is Bitcoin really going to make a charge above these highs? And if so, I want that to be price appreciation, not trying to roll calls. So what I'm going to do instead is if we get pullbacks into here, I'm adding more, pullbacks into here, adding more, pullbacks into here, adding more. But, covered calls, it's a good timing mechanism. If you have a likely pullback coming, selling calls at those highs. I did that with gold when I thought we were topping out around 3,500. I did it here around $61 to $62 on IBIT. So I just don't like, 30 cents is 30 cents, but I also don't want this to, go back up to the highs and all of a sudden I'm rolling and I've got 3,000 shares that are going to lose out on this price appreciation if we get another high. So I think what I'm going to do is just dollar cost average in. I've got this put. So if price is going to pull back here, if price is going to pull back, then those puts should be hopefully paying something. Let's see what they're doing right now. They're paying a little bit, not much, but they're paying a little bit. So these are all my, like this chunk right here is all protective puts. So December, that's a protective put, protective put, protective puts, protective puts right here. So it's all green. I mean, it's just not a lot of money. But if price does go down and accelerates faster to the downside, I can lower my cost basis kind of the same way by having that hedge. So we'll keep an eye on that for Bitcoin. MicroStrategy. I have 300 shares of MicroStrategy. I am using it for an income method. My 310 is still my covered call. We've obviously pulled back a little bit off these highs from around 429. MicroStrategy is down around 14, 15%. I'm just going to keep rolling this. So we come into the end of June 27th is my expiration. My break even is 252. If I can roll it for another $3, $4, $5 for a week or two, I'll do it, and I'll just keep adding more to it. So that's an income method. Coinbase pullback is fine. If we have a deeper pullback, I wouldn't mind doing some more ratio spreads on Coinbase. We are adding this back into the S&P 500. That's replacing Discover Financial that was announced a few weeks ago. Ethereum is still looking like potentially a bull flag. So we have a run here. Nice little pause if you're interested in this bull flag opportunity. I mean, look, if we get a breakout, there's room to run. Look for the catch-up trade. If it's a swing, either small position 1, pull back into this inefficiency position 2. I would even say a small entry at 3 and then stop loss at the 127 pullback zone. So if you did a fib like so I plot my fib, I have a pullback zone here that also would kind of serve as my stop loss. So it gives me a little bit of buffer unless price is going to retest. But I think if we just go up and we pause, we run higher and off we go. Or we run up and we pause, we break, we retest, we come back into some inefficiency like we did here, and then that's where the swing traders come back in. But if this low holds, I think Ethereum looks like a good trade. Copper, son of a biscuit. Well, I might lose 90 bucks on copper if it's going to run hot. I've still got a butterfly spread on here in the green lines. This is for the Swiss franc. This is Japanese yen. Japanese yen's not messing around, man. I don't think. I think this could be a bigger story than what people think in 2020. In fact, I just want to put this on the radar. Like the Japanese yen could be a blind spot in everyone's outlook. You have to remember, July to August last year, the Japanese yen was getting a massive deleveraging, and what happened? Well, the market had like a 10% haircut in a matter of days. So if we start to see Japanese global bond yields rising, which they are, and we start to see more, struggling auctions for the U.S. or just U.S. yields rising, I think this just makes putting money in the Japanese banking system more attractive. If they're all of a sudden going from 0 rates or negative rates to now 3-4%, I mean, you're going to think there's going to be repatriation. There's going to be money coming back to the Japanese economy and the banking system, and I just think this is potentially a blind spot. If we break this high, FXY is kind of the inverse of the Japanese yen. If this is a bullish pattern, right, and it's like a very deep right shoulder, if that's the case, or I mean, this could be, it's not quite a double bottom, right? Because that'd be like saying that the dollar yen is a double top, which it's not. But if this is a head and shoulders pattern, even this going to a measured move, I mean, this is the 140 resistance on the dollar yen to the 120 measured move. So I'm just throwing it on the radar. Like if this 140 handle does not hold in 2025, I do think this will increase a lot of volatility in the currency markets. This will be a potential blind spot that not a lot of traders are seeing as far as like risk on, risk off trading. This would be risk off. To me, I'm going to see this as risk off. You know, we'd have a flailing dollar. We'd have currencies going nuts. We have most central banks that are cutting rates. So if you think about the bell curve of rates, it's like the U.S. is likely going to cut in September, but the ECB is cutting, right? Aussie's cutting, New Zealand's cutting, CAD is cutting, Bank of Japan is staying the same, but they've been raising rates. Dollar eventually will be cutting. Eventually, maybe, but it's funny how like the Fed can be like the first to talk about cutting, the first to talk about raising, and every other central bank follows suit, and yet we're like the last to actually do the action. We just get so much mileage out of jawboning our currency and what we're going to do with monetary policy. So anyway, watch this 140 floor. It's really important. If 140 is going to break, there's not much stopping this thing to 120. This is also why I'm sitting on a lot of cash on the sidelines, because there will be incredible opportunity for positioning. You know, whether this is a break of the floor that drops 2,000 pips, and I can just look at scalping, 15-minute charts or 30-minute charts or 1-hour charts in a sell zone, or bear flags as the Japanese yen tends to behave. But I just want to put that on the radar. Like, you need to be aware that this dollar yen, if it holds the lows, it's a great range trade, right? If it breaks the lows, it's a great pattern trade. I don't know which direction it goes, but the crazy thing is we have, 2,000 pips on a floor break, and we have 2,000 pips if we come back and revisit the highs. It could be messy somewhere between, but man, if this thing breaks the floor, I think this also has ramifications of bleeding over into the equities markets. Okay, what does that do to the Nikkei? What does that do to the Nikkei? Well, Nikkei so far has not made highs from last year's debacle. EWJ is making some fresh highs, which is what I'm purchasing. So I'm in EWJ. If we rip to all-time highs, that's fine. The DAX, just off of all-time highs. I just dragged a fib here, which I'll just keep modifying this. I wouldn't mind seeing a pullback on the DAX for a buying opportunity, or we're setting up for a broadening pattern. I don't think that's the case necessarily. I think that all this money, going back into Eurozone for at least this year looks a little bit more encouraging. I just wonder, I mean, this is a hard trade to participate in, right? If the DAX just goes higher and higher and higher, and there's no real pullback, it's hard to trade it. So I'd like to see, I mean, I'm just taking a low from the, April 7th, April 9th low, and then get to the highs. So do we pull back to the 23 to 30% zone? If so, does that revisit the highs? Like, give me structure to trade. Just don't keep going higher. So if you own the index, if you own the DAX in some way, shape, or form, then great, you're at all-time highs. So you can benefit from that. But I'm saying as a trader, I just want to get some dips and pullbacks. Okay. This is how I'm participating in the DAX. Is I just sold puts. When this thing dropped below, I sold 48, 47, 46, 45. Sold puts. So they're in profit. But I just need more time. I sold basically leaps. UK is sitting right back towards the highs, kind of the same situation. Are we going to, hit highs, pull back first before we go higher, or are we just going to break the highs with some renewed momentum? I don't know. But your chance to participate would have been the 200 or these lows, and it was a scary time. I mean, this was a systemic move that I didn't know how it was going to get fixed. I mean, it's not like we came to the rescue and stimulated the economy by throwing $5 trillion at it like we did during COVID. It's like this just was a change in narrative. It's wild what happened there. All right, Argentina, China still pulling back. Brazil, I like Brazil and Latin America quite a bit. I want to see if these play out. MAGs, we'll get into the MAG 7. I mean, MAGs is the ticker. I'd like to see this, right? I'd like to see a pullback into this cluster. Longer term, I mean, I will look at this. Let's say we get a pullback in MAGs. I may take a dollar cost average position here. are around, let's say, $49, and let's say that's area 1, we pull back to like 44, area 2, pull back to the lows, area 3. Okay, I'll dollar cost average into mags. I don't mind it. We don't have a dividend on or anything. It's going to be purely growth. But individual stocks, if we get pullbacks on mags, it's like, do I look at Nvidia for, a ratio spread? Do I look at? They're all kind of expensive. Like Apple. Apple, I don't think is the growth company that it once was. So I'm not as excited about Apple unless it's just a crazy good price. I think it's a very stable and secure stock. It's going to grow consistently. It's going to have crazy amounts of cash like it always does. Amazon to me has better upside. So I've got a lot of exposure on Amazon with some ratio spreads. So right here, Amazon, I've got some puts and a lot of ratio spreads. So that's what I have running right now. If we have dips and pullbacks, I wouldn't mind looking at the same thing. We have a pullback here. I'll probably do some more ratio spreads. I might look at some more naked puts. I guess another trade on Amazon would be, I don't know. I've got to believe that the price can go higher, but if I looked at something like this, where I go out to, maybe the end of 2026, are we going to be greater than 240? Because there's an easy way to trade like an asymmetry. Check this out. If I do trade, let's see how far I can go. So I can go out to December 2026. Do I think that Amazon will be above the highs by next year? Above the highs at 240? Well, if I do, I can buy a pretty cheap debit spread. So for $1.73, I can make 327. For 333, I can make 667. For 485, I can make $1,000. Like I get roughly a 2-to-1. That makes sense. So if I'm optimistic for the future, I think Amazon is a strong company. If we're above the all-time highs by December of 2026, then I get basically a 2-to-1 trade. Okay. Now the nice thing is if this were to happen, let's say that we get to all-time highs this year. I may not make $1,000 on this trade, but I can certainly turn a 487 debit into maybe 587 or 687, where this thing maxes out around $15. Right? So I could probably turn this into like an $8, $9 credit, and I can still take a good chunk of profit by the end of this year if it happens faster. Okay, so I'm gonna actually take a look at that one. That's not a bad trade. So this is probably to me, a cost-effective way of trading Mag 7. Allocate $500 to make $500. Allocate $500 to make $1,000. I could generate that by the end of this year. Even though I'm going all the way to December 2026, I'm trying to be optimistic for growth. I think that Mag 7 growth is pretty decent, right? So again, this doesn't mean that I want to have pullbacks, but the nice thing about a debit spread is this is the most I can risk. So even if price were to go against me, 485 just becomes less, right? And if we end up making a run to 485, or I'm sorry, for 240 or higher, then I keep the trade looking pretty good. So as long as we're stable in here, I'd be pretty happy with that. Yeah, I kind of like that trade. I think I'm going to take it. All right, so that is Amazon. So I'm going to look at Amazon for a 12 of 26 expiration, 240 by 255. I think that's about appropriate. If I took like a $500 risk to make $1,000, the more asymmetric I get, if I go up $20, I spend $635 to make $2,000, so I can still net about $1,367. So I don't know if I would necessarily hold the trade for a full 564 days. I think that's a lot. What I'd likely do is if I can turn 633 into $300 to $400 of income, then I'll take the profit and I can always reallocate. So anyway, I'll kick that around. But the more I'm willing to say, okay, I invest in Amazon, I risk $900 to make $2,000. If I'm given this trade time, it's like the question is, do I think that Amazon could be at all-time highs going into 2026? I think with cloud computing, with AI, I think they're innovative. I think logistically, it's hard to dethrone them. Logistically, I think they're going to continue to evolve. The only thing that kind of tames them is like government probes, and I think right now this government is probably wanting to do anything it can to maintain growth. So I think that you shouldn't be really messing with Mag 7. But anyway, I'll kick it around, and I kind of like that $500 trade. If I risk $500 to make 1,000, I kind of like that trade. So, all right, a couple more, and then I'm going to wrap things up here around 11:15. I think James is coming on, so I want to make sure that I could pass the baton over to him. Broadcom all the way back up to highs. I mean, what a rip, man. That was an impressive rip. 140 back up to 240. This just the chips and semiconductor up 80%. Wow. Impressive. Google, dollar cost averaging, and my ratio spreads paid out nicely. Meta, another one, kind of the same thing. It's like, do I think that Meta can be at these highs? If I think Meta can be at the highs, I think it's a good looking trade. Is it terribly expensive right now? Probably not. It should be pretty decent. If I went to, I'll do the same thing, December of 2026. And the all-time highs are 741. So if I did a 740, let's see what a 740 by 760 would cost me. Once the option chain fills up here. So I'd have to risk about $700 to make $2,000. So I pay 7, I gain 20, and I can turn 712 into potentially $1,300. Now again, same thing here. Can I turn 712 into 912, 1012? My max profit here is $20. I can use this as an income. So I think Meta, same thing, like a 740 by 760. It's a little bit more expensive, but I mean, Meta, Microsoft, both kind of the same situations. I think we are trying to make a run to these highs. Again, I'd like a pullback. If it's possible, does Meta have a pullback first? I'd like the same type of trade to just be cheaper. But if we just keep going higher, 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 then I can turn that into an income trade. So I think I'm going to take these trades. I'll get these positioned. Look for those to pop up in Pulver alerts this week. Microsoft, what a run! It's already back up near the highs. Could go higher, but I'd like to see this low, high, pull back a little bit and probably start doing some more ratio spreads. Like these are all profitable from this year. Got a little gnarly there during that April sell-off. Netflix still creeping up about these highs. I just saw a trailer this morning for Happy Gilmore 2. I don't know, man. I think it seems a bit pandery when you're saying the same lines from movie number 1. So again, as a Happy Gilmore fan and a golf fan, I'll still watch it, but I hope I'm not terribly disappointed. Nvidia 136. We kind of faded the earnings play. This is also another income trade of the 130 collar. Tesla pulling back nicely. This is great. I'm up about $1,700 on my Tesla calls right now, and I don't mind seeing a pullback here. And in fact, I'm just going to keep adding covered calls. Keep adding covered calls. Berkshire, another company that's over $1 trillion, and that's about it. TLT, anything here other than just like actively selling against it? Let me check my TLT positions. So TLT here, I've got the 89 call going out to the end of this month. So I got a 65 long call, 89 sell call. It's a diagonal spread, and I'm just going to actively just try to rotate this for profit. Anything happening here on mortgages? Average mortgage 6.9%. Futures market. Did we do the Dow US 30? I thought I did the Dow earlier. So the US 30 is at 42,116. I mean, again, we're right in the middle. So do we have what it takes to get up to higher highs? I mean, this one looks a little bit better positioned for a melt up versus the S&P is, if I drew like a line here, S&P is kind of at this level. Nasdaq is kind of up at this level. I mean, the Dow, if we have a pullback, I think it's going to be relatively quiet. I mean, we could just have sideways chop in the Dow. So right now, it's like the Dow's not terrible for maybe, I don't know if I can get one of those 1-1-1 trades running, but let me find out. So if I want to trade the diamonds, I go to DIA on my account. Yeah, I mean, we still have another, from current price to the highs, going to about another 7% to get to highs, versus we're like, what, 3-4% away from highs on SPY and Qs. Lows around 366. Let me see what this looks like. I do have some puts already running that expire this month. So my Dow positions, naked put. I mean, I should just take profit of this. I'm up 93%. 345 is max, 318. I mean, again, probability of profit's still really, really high. About a 99.5% chance that it's like we're not coming back to those lows by June 30th. So I guess I could just let it do its thing. Up $180 out of 200, up $180 out of 200. So I'll let those go. Anyway, let me look at a fresh trade. Again, I do expect some pullbacks here. So maybe a 420. Let me try something creative here. Let's go out to maybe August. That's out 74 days. If I were to kind of trap this thing, either a trap right there for $1.30 gets me $5, and then the lows are back around 365. Do I like this enough to take this trade? Again, pullbacks, it's a little bit less volatile. If I did a 360, I mean, this is one of the cheaper ETFs. That's why I'm trading IWM. Let me go out 2 contracts here. So I could do a 112 on this one. Probability of profit is about 99%. I am on the hook for a naked put. So, I mean, there could be some volatility ahead if the Dow, drops. Let's say, I mean, if it drops $10, I'm down $1,000. It drops $20, I'm down $2,000. But I think the probability of profit is good. Plus, I have a profit trap in here too. So this isn't a bad trade. This is essentially saying by August 15th that we are still holding above the April lows. And if that's the case, it's an income trade. So let me see here if I did this. The strike I have is 340. That's lame. Yeah, that's not going to work. So I'm going to cancel that trade. So if I want to do this trade, I have to do a 112, and I usually don't like to have that type of beta weighted in my portfolio. That's too much. So I like the income. I like the probability. I've got to be willing to deal with some pretty heavy drawdowns. It does take up a lot of buying power. Let's see if this costs on my PM accounts. So 2,800 on a PM account. That's portfolio margin. I mean, probability of profit's really high. If we are below 450 or below 410, I can keep a $5 profit trap. So the profit on this one potentially is around $600. So I mean, basically, if I took the trade, I'd be looking at an income trade around $1.70. That's safe. Like that's what I expect to make. Potentially a profit trap would be in the middle. By the way, oh, sorry, Chandler. Okay, cool, man. James is standing by. I'll talk about these trades. I'll look at these in the Pulver alert. So looking at Amazon, looking at Meta, this one on the Dow, I might do a trade like this. I don't really like having 2 puts on here, but if I have a profit trap and price is higher, I still make $1.73. If price is lower, I make the $1.73 plus a $5 profit trap, so I make about $670. If we don't take out the lows, it's a good trade. So a couple of trades here I'll be looking at. Look for those in the Pulver alerts coming this week. James, take it away. Thanks.
We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show.
Hello. How are you guys doing? Happy Monday. I hope you all enjoyed your weekends. So we had cooler US data come out earlier this afternoon or this morning, depending on where you're located. We've also got I think it's Powell speaking later today. Let me just double check that. I think fairly sure we do. Yes, Fed Chair Powell speaks 6 p.m. UK time, so just under 2 hours away. So we'll see what's said. I would expect it to be pretty much the same as what we've been hearing quite a lot recently, sort of a cautious approach, unsure about tariffs. So likely going to sort of reinforce that rate hold narrative. Although we've seen inflation come out a little bit cooler, so that might sway it towards a cut. But yeah, I'd be very surprised. So I think Euro Pound is a really, really nice potential setup. We were looking at this last week. It's still on the edge finder here of a -10 reading. I talk about the price action or the behavior of Euro Pound quite a lot. I'm getting a bit bored of covering it because I talk about Euro Pound all the time. But for anyone that's hasn't heard me mention it, the typical behavior we see here on Euro Pound is we generally have very aggressive upside moves, and we've had a particularly large one recently. Obviously, the euro is heavily bolstered. We had a couple of catalysts for that. We had the German fiscal stimulus. We also had obviously the risk flows coming out of the dollar into the next liquid asset, which is the euro in this case. However, we are starting to see this move down now. So considering the fact we're at this level of structure, we've got this 200 moving average that seems to be acting as a dynamic resistance as well. This position doesn't look too bad. The problem is I'm just cautious again about the price action here can be very, very choppy on Euro Pound. So yeah, I just don't want to get caught in chop. So this week I might just take it slow, but this is probably the number one setup I'm looking at right now. Pound Aussie also makes a lot of sense. I really like Pound Aussie. Let me pull this up. Limitless for brokers. I'm fairly sure some links in the description for brokers. I think, is it Oanda? I'm not 100% sure, but I know there's Webull that there was just an advert for. I think, is it Vantage or Oanda or something? There'll be a link in the description for a CFD broker, I'm fairly sure. Yeah, we can have a look at US 30 in a second. Yeah, so Pound Aussie here is getting a really nice reading. I just forgot to mention the macros behind Euro Pound. So I've got written here, the ECB is widely expected to cut rates in June, while the Bank of England is delaying its first cut, waiting on wage and services inflation to cool. UK core inflation remains sticky, while Eurozone disinflation is accelerating faster than ECB projections. Relative policy divergence favors GBP in the short run. Okay, so moving back to the Pound Aussie here, we've got a bullish reading of 8. Let me just focus on this 1 second. I need to log in. Okay, there we go. Yes, so it looks pretty strong. I mean, I suppose the negatives here is seasonality is relatively bearish, but to be honest, seasonality on G10 currencies for me is relatively unreliable, especially in times like this when the markets are not even necessarily fundamentally driven. They're more driven by risk sentiment. So if you look at things like euro dollar is a perfect example. Actually, fundamentally, euro dollar is actually pretty weak, but it just continues to climb because we're seeing a lot of investors come out of the dollar and start buying into the euro. So it makes it tricky, in my view, to find solid swing trades because, again, you could have a great fundamental reason for a trade, but whether the markets are agreeing right now is a different story. However, on paper, Pound Aussie looks great. Retail is sort of 50-50, slightly swayed on the long side, but this isn't enough to change my bias whatsoever. So the trend is still bullish. 200 moving average here is continuing to act as a dynamic support. So I will be looking for price to come back down into this area, have some sort of rejection, then continuation to the upside. So this might be a play for tomorrow once we can see a couple more H4 candles close and see if we can get a bullish one to engulf the previous, and then that would be a signal to get in as far as I'm concerned. We are seeing this resistance level remain intact. We've triple topped off here now, so that could be a little bit of a warning flag, but again, the only thing I can really do at the moment is play off the fundamentals, even if that's not what's necessarily driving the markets right now, because you could position risk on or position risk off, and all it would take is one escalation or de-escalation from any, it could be Europe, could be the US, could be China, and the markets are going to react quite severely. So you're kind of damned if you do and damned if you don't. So yeah, it puts me between a rock and a hard place. That's just my view, though. So US 30 still Oh, the edge finder is still very risk on, actually. So we've got the Nasdaq, the S&P, the Dow, the Russell, all the top leaders here. So that is obviously risk on readings. I don't know. Well, actually, it doesn't look like it really takes into account risk sentiment on the trades themselves. I suppose you could then say COT data would indicate that. Either way, we are seeing a risk on readings here. So automatically, I'm looking to buy the S&P. Buy the US 30. We are, again, as I mentioned earlier, we're seeing this 200 moving average as acts as a really nice dynamic support through here, indicating that the uptrend remains intact. So to be quite honest with you, I actually don't mind where price is right now. It would be very aggressive, and I wouldn't take this because, again, we've got Powell speaking in just under 2 hours. I think that would be a little bit preemptive. But from a technical basis, this seems pretty solid, actually. So a stop loss just below this wick here, just to allow price to have some room to breathe. Also below this 200 moving average, again, just to allow 2 areas of potential support here on this moving average and here at the support level, obviously aiming for price to continue to run higher. But yeah, the stock markets have had an incredible recovery, really. I mean, the DAX has had a full recovery and created new all-time highs very, very quickly, which is very impressive. But it puts me in a bit of a cautious state because the situation isn't done. Tariffs can still, again, escalate, de-escalate. So I'm not really in a position where I want to chase this. If we can see pullbacks, I mean, that would be a bit much. But if we could see pullbacks against this 200 moving average, that would be a great opportunity. Or even just to fill these gaps that we've been seeing get formed that haven't been filled yet, that would also be a really, really nice longing opportunity as far as I'm concerned. So yeah, that's my view on that. TBM bought down 41k. Okay, let's have a look. So you've got a pretty strong entry there, it seems. Let's have a look. 41,000. Hold on, let me just redo that for you. 41,000. Yeah, that's a really nice entry, actually. So I assume you entered. I would assume you entered around this point here. Obviously, it could be wrong, but either way, looks really strong. I would, if I was you anyway, I'd be looking to hold that position and just trail stops because it's likely. Obviously, I'm not guaranteeing anything. I can't do that, unfortunately. But it is likely that we are going to come back to these all-time highs. Obviously, we're going to have to just watch tariff developments and things. But eventually, if you can hold on to the position, it could be a really, really good moneymaker. Silver is doing very, very well, along with gold. Actually, the metals are having a really, really great day, which to me isn't good because I'm not positioned for this. However, it's very interesting to see how much they have rallied recently. So what I'm doing, I'm now looking to buy gold because previously, hold on, let me just reset. Before we broke out of this, so before we had that, during sort of this period here, I was actually quite bearish on gold. And I'm still not overly bullish. I'm not going to take gold longs expecting new all-time highs just yet. I think that, again, will be a little bit premature. Because pretty much everything's priced in. Obviously, we've had tariff developments over the weekend with sort of the relationship between the US and China taking a bit of a hit. What was it? I can't remember off the top of my head exactly. I think Trump was saying that China violated the terms. The latest update I've got, as far as I'm aware, is that they've got a meeting scheduled this week. For when, I've got no idea. And whether it will go well, again, I've got no idea. But if it doesn't, that could be another catalyst for gold to continue to rally higher. So anyway, what I was trying to say was if we can come back and retest these highs and this trend line, that would also be a pretty nice longing opportunity. If we end up coming lower and sort of forming this sort of triple bottom around this 200 moving average, again, that would be a really nice long opportunity. To be honest, my view on gold right now, although I said I'm not necessarily overly bullish, I don't really see a huge reason for it to run into, the 4,000s. I think it would be very sort of naive, really, to start trying to short gold after the run it's had over the past few years, and in the middle of uncertainty. I think even if you're in a position like me where you don't really have a hugely bullish idea, I'd rather go long than go short at this point, which is a little bit of a change of tune. But of course, it's important to be able to change up your ideas and stay adaptive. As for silver, I really, really like. I'm actually a little bit salty that I missed this. I was looking at silver yesterday on my meeting with Discord members. So the setup here was screaming a buy. I mean, look at this. Was this one quadruple bottom? Created a really nice support on this 200 moving average. Still, we had uncertainty. We've got the dollar weakening. Yeah, silver was just it was a really, really strong play, but sadly, I didn't take it. So I'm kicking myself a little bit on that one. But similar to gold, I will be looking to go long on silver on the next pullback, which could be potentially just retesting these highs. So obviously a very typical break, and then the retest, we take a long position and see if we can get a run. I think since late last year, actually, I was looking for around $40 on silver, and we may, I mean, it's still quite far away. So I'm not, oops, sorry, I was wrong box there. Still a little bit far away from 40, but it's definitely possible, especially if we are going to see the dollar continue to run down. I've seen quite a lot of hustle and bustle from not just the institutions, but news outlets as well. I mean, news outlets normally, actually, to be honest, quite like to counter that idea, but I'm just not seeing any optimism whatsoever. I've not seen one good case for the dollar over the past couple of weeks, or sorry, past week or two. It's pretty dire, but we'll see. We'll see what happens, because it's not even just a tariff problem. I think Nick's mentioned a few times the stagflation. So we've got slowing growth, and we've got the Fed going to cut rates later this year. So it's obviously mixed on, are they going to cut after June, or are they going to wait till 2026? And to be honest with you, I have no idea. I can't really put my finger on what to expect in terms of the timing. But if we're having stagflation, we're having slow growth, we've got Fed cutting rates. Obviously, well, actually, stagflation and rate cuts don't necessarily go hand in hand, but whatever. Either way, the dollar's not in a position where it's really got much of a happy outlook, to be honest with you. It's looking quite bleak. So we'll see. But, I mean, not long ago, people were screaming recessions. There was all sorts of stuff going on, and people were having a proper panic attack about the S&P. And look at the recovery we've had there. It could be a very similar situation with the dollar, where people are just alerting the fire alarm, and actually everything's going to be okay in a couple of months. But again, who knows? Who knows? Royal Trades, hello, good to see you. Pound dollar, yeah. Sorry, let me just take a drink of water. Just give me a second. Excuse me. Okay, so pound dollar, similar situation. The pound, we actually just spoke about the pound. Let me just quickly recap it for you. Yeah, here. So the British pound carries a neutral to mildly bearish macro outlook over the next 1 to 4 weeks. While disinflation is proceeding, the Bank of England remains cautious, awaiting clear signs of easing services inflation and wage pressures. Domestic data is stable but uninspiring. The political uncertainty caps investor confidence. Unless the May CPI print shows material improvement in core inflation, the Bank of England is likely to delay easing into August, leaving the GBP susceptible to relative rate divergence, particularly versus currencies whose central banks are already easing. So it doesn't necessarily apply to the dollar, because obviously the Fed's currently holding, but the optimism around the dollar, the optimism around the pound is much stronger than around the dollar. So I would be actually more looking to go long pound dollar rather than short. This actually would have been a really solid entry. I didn't see this. So very similar setup. Look for this 200 moving average. Look for a pullback, whether it be in, well, actually this would make a lot of sense. Back into this level of structure, into this 200 moving average, and then we take a long position looking for a climb higher. Let me just see. Sorry, my cat's here. I'm not sure if you could hear him meow then. Come on, you can come here. Oh, no, you can just walk off. That's fine. Yeah, I'm not really finding much of a fib level here, actually, that makes yeah, no, there is no fib pullback there. But this alone, to me, is completely fine. I actually really like the look of that. So yeah, actually, I might revise my idea and add this to the watch list here. So yes, I think it would be like this. Stop loss. To be honest, I think this level makes sense, accounting for just this little low here. Obviously, this 200 moving average. That just gives us a little bit of a buffer if price does want to come down slightly lower, so we're not taken out by just noise. Remember our yen? Wait, hold on. How do you remember our yen bet? Yeah, if you're... Are you the person that bet with me that dollar yen was going to go back to all-time highs? Yeah, I'm not sure your idea is working out there, buddy. You might owe me a coffee. Actually, that brings me on quite nicely to my dollar yen idea. So I was actually, yesterday, I was quite mixed on dollar yen. However, I've had some time to sit and think about dollar yen this morning and sort of watch the markets, and I've definitely been swayed to going short. The only real roadblock for dollar yen would be if there is a complete resolution of tariffs, to be honest with you. That way, obviously, we'll see an outflow of yen, and we would likely see investors will slide back into the dollar over time. However, the way things are at the moment, dollar yen's not looking good. I've also seen quite a lot of institutional positioning in shorts. So we've got, MUFG is currently short dollar yen as well. So yeah, I'm quite happy to jump on this trade. We've also got the 200 moving average that's in a bearish trend here. So I'd be looking for this 50%, 61.8%. Sorry, this 0.5 to 60, 0.618 pullback. And then I'd be looking to go short into this fib extension. I think that's probably the cleanest, the easiest setup I've got right now, actually. Your new quant, make sure to feed him good. Yeah, I mean, yeah, he's been letting me down recently, actually. I told him to give Powell a call and make the dollar a little bit stronger, just so I could get help in hand out some positions. But yeah, he's kind of let me down on that front. You still standing on it? Well, I'll be honest. Ugal. Regardless of what the Fed says, I don't think we're going to see dollar yen go back to 160 anytime soon. Anyway, I mean, obviously, we know we need a timestamp because it very well could do in the next 10, 15 years. But over the next, I'm going to say over the next 12 to 24 months, I would put money on the idea that dollar yen is not heading back to 160. Titus pound yen. Yeah, so I like the idea of pound yen, but I'm not convinced. And the reason is because I quite like the pound short-term. I quite like the pound for short-term buys, but I also quite like the yen for short-term buys as well. Well, actually, I'm bullish on the yen short and long-term at the moment. But that puts me in a situation where both of the currencies, in my opinion, are quite strong. So do I favor the pound over the yen? I don't know, because obviously we've got safe haven attraction with the yen. So as I said earlier, if we do see escalations in tariffs, de-escalations, this trade's going to be thrown about all over the place. From a technical aspect, however, just a very sort of short trade, I guess it would be more of an intraday position, something like this. Again, stop loss just below this low, allow this 200 moving average to do its job, and see if we can get this run back up into these highs. So yeah, we'll see. No, it's all right. I mean, I'm not taking it as a serious competition. You know, I mean, it's a little bit of fun to have a little bet on now and again. Say, where's the market going to be in 12 months? Who's going to be right? Who's going to be wrong? I've gone short pound yen, but I think it is a bad trade after analyzing it further. That's the mistake, Titus. Sounds like you were too trigger happy to get in. As soon as you saw the target, you went in rather than waiting to analyze the target. Does the target have a gun? So yeah, I think maybe get out. What if you are in a position where you still sort of break even? In fact, it doesn't even matter. Even if you're in a bit of a larger loss, if you're not happy with the trade, just get out. There's nothing worse than holding on to a trade that firstly isn't going with you and also isn't what you think is going to do anyway. because then you're just losing both times. You're losing mentally and you're losing money. Okay. Yeah, so euro pound, dollar yen, pound dollar, and I think Aussie New Zealand might also be a pretty good one. Yeah, so I suppose Aussie New Zealand has a couple of different plays you could do here. So depending on your style, you could wait for the break lower, a retest and continuation. I'd be looking for these lows to get tapped again. Or if you're a bit more like me, where you'd rather wait for a pullback. I would take this if it happened, but I would rather wait for this pullback. Watch this 200 moving average come down, maybe reject off this previous high, then come down lower. I think that would be ideal. But yeah, Aussie New Zealand, actually I forgot to show you, excuse me, here on the Edge Finder, -8 bearish reading. So it's pretty solid, to be honest, on a fundamental view anyway. Yeah, good stuff. I just realized I'm like half off the screen. There we go. Did you hear that the Senate wants to impose tariffs up to 500% on anyone who's buying Russian oil? Wow, no, I didn't hear that. That's incredible. Yeah, this is the thing. There's just so much going on at the minute. It's like it's as far as I'm concerned, it's next to impossible to have a true speculative play because, as I said earlier, it's like, you could have an incredibly strong idea on the fundamental view, the interest rates, real rates, yields, whatever it may be. You could have your great idea, and then all it takes is someone to sneeze and your trade's done. I mean, obviously it could go with you, but it's 50-50 really, because we have no idea what's going to be said next. I'm long dollar yen with SL below the last month low at 142. You're long dollar yen, okay. 142. Okay, so you're pretty close to getting stopped then, right? So your stop loss is just below this support level. What's the reason for dollar yen long? Dollar CAD, okay. I'm just checking the Edge Finder. I don't think it's on here. It's not. Okay. Give me a second. I don't really keep up with the Canadian dollar, to be honest. It's kind of a currency along with oil. I've kind of just left it on the sidelines. Don't trade it. Don't touch it. Don't look at it anymore. Okay, so we've got oil. Let's just see what it's doing on the higher time frames here. Daily still consolidating. It's still very cheap relative to sort of the average price of oil or the ideal price of oil. It's pretty cheap, to be honest with you. But that doesn't mean it can't go lower. So the monthly candle closed bullish, or last month's monthly candle closed bullish. Weekly is very choppy. Daily's choppy. The H4's choppy. So technically, there isn't really anything on oil. There's no directional play that we can make there. So US dollar CAD. Yeah, technically, obviously, we'd be looking to go short. Very, very clear down. Very clear downtrend. That's what I'm trying to say. So I'd be looking to potentially just get short on whatever the next pullback is. That arrow is way too high, but maybe just on if we can come up here, form a double top, then start running back to the downside, break this support level, trail stops. That again, just from a technical view, makes sense. So my analysis on the CAD says the Canadian dollar carries a mildly bearish macro basis over the next 1 to 4 week horizon. Soft domestic data, dovish Bank of Canada poised to cut, a cooling labor market and uncertain oil supply all tilt the short-term fundamental outlook lower, while not a high conviction short due to residual commodity and risk appetite flows. CAD is increasingly exposed to policy divergence narrative that favors the weaker trajectory of economic grounds. Okay, so it doesn't sound like the CAD has much going on really at all on a fundamental view. However, if we've got oil just ranging, and the CAD might be slightly bearish, but not sort of sink it to the ground bearish, taking it against the dollar might not be a bad idea. It would essentially just be trading a very weak currency against a slightly weak currency, which obviously isn't ideal. You know, you really want to trade strong versus weak as a general rule, but that could be a play if that's really what you want to do. Got to write an exam. Hope I don't get stopped at my US 30 short. It's a scalp. Kind of don't attack me. See you later. Have a good one. Good luck with your exam and your trade. Gold. Yeah. So as I was saying earlier on gold, I'd be looking for a rejection off the current level, to be honest with you. We've had a really, really strong run today. It would be a bit of a surprise to me if we don't see some sort of reaction here slightly lower. Now, whether it's just to this sort of trend line, which would line up with the previous highs, that would be great. Or if we can come even lower, back into this 200 moving average and then continue higher, that would be even better. I would really be targeting just these highs at first with a trailing stop, and then see if we can get escalations, and then that would maybe drive gold towards sort of 3,700, 4,000. Excuse me, I've got quite a dry throat today. I'm not sure why. What fundamental mostly moved dollar CAD mostly? Same as everything, Tranquility. So you've got interest rates, central bank policy. So, you know, is the Fed hawkish, dovish, neutral? Then you'd obviously compare it with the Bank of Canada. So let's say the Fed is super, super hawkish and the Bank of Canada is super dovish. You've got a really nice central bank divergence there. So you might want to go and buy dollar CAD. So you take into account general fundamental factors, obviously like the labor market, inflation, central bank. But then you would also, specifically for the Canadian dollar, you need to pay attention to what oil's doing. So if oil's rallying, that's quite a good sign for the Canadian dollar to gain strength, and vice versa. If oil's plummeting, it's quite a good sign that the Canadian dollar might drop off, because oil is a big, big part of the Canadian economy. So that's that. Can you share an indicator that gives you more confidence while entering a trade for USD pair, and explain some basic strategy for that indicator? Yeah, I mean, pretty much what I've got on screen here. So 200 moving average is this really thin gray line that you see. So look at gold. So this is quite good to just gauge, should you be buying, selling, or doing nothing? So in a time like this, when the moving average and price are just sideways, this is horizontal. You know, you cannot view this as bullish or bearish because there's nothing happening here. So this, just from using the moving average, is a no trade zone. But as soon as you start trending, you don't do anything. So obviously here we've lifted off. Sure, we missed this because, you know, there wasn't, for me anyway, there wasn't really anything there to tell me to buy. But that's where patience comes into play. So you'll see this, you're like, I've missed the whole thing. FOMO, you might buy here, which obviously in this case would have worked out, but FOMO is generally not a good idea. But this is where the RSI comes into play, and the moving average, of course. So we see this pullback into the 200. This is called a mean reversion. It can be driven by anything. It could be driven by news. It could just be driven by profit taking, whatever. It doesn't matter what it's due to. The sort of general thing here, where we're moving back to a benchmark, which in this case is the moving average, is called a mean reversion. So if we see this, so let's say we've had this drop on gold. We've just seen this bullish H4 candle close. It obviously looks relatively strong in hindsight, maybe not so, but at the time that would have been quite a nice candle to buy from. So obviously you take into account what is driving gold. Is gold actually a good thing to buy fundamentally? If you've got that, then fine, we move on to these technicals. RSI here became overbought, and that's it. That really is as simple as it is. You can also mix things like the fib. I don't think it would fit in this situation. Yeah, no, it doesn't. But yeah, that's pretty much it. So this is basically a momentum strategy, and you know it works on anything. I don't trade stocks or crypto, so I don't really know if it works well on there. But in terms of currencies and commodities, it works very, very well, because all you're doing is following the trend. You're looking for dips and you're buying those dips, and that's as simple as it is. trading can't really be much more easy than that, to be honest with you. Hello, James. What does a hawkish and less hawkish mean? So hawkish, okay, so the way I remembered this when I was learning, I'm not very good at drawing, but let's say this is the hawk, obviously with the big wings and all that. That's the hawk. So hawkish means more like the more leaning towards rate hikes, basically. And a dovish, obviously a dove flies lower than a hawk. Again, this is just how I look. This is how I memorized it. It works for me. A dove flies lower than a hawk, so generally rate cut sort of narrative. Obviously, if it's neutral, then it doesn't really do anything for us. But yeah, that's that. So hawkish, more likely to sort of hike rates, or more optimistic, should we say. And dovish is the opposite. I might have to clip that and put that on Instagram. I think that was some top class education there, actually. Okay. So we've got just over an hour until Fed speaks. That'll be interesting. Specifically, Fed Powell speaks. Hopefully, he will deliver some dollar strength, but we'll see. The dollar's having a really, really tough time. I really expected the dollar to hold this level. Actually, I'm not really surprised it didn't, to be honest. I mean, there isn't really any reason it would fundamentally, but I just thought it would have a bit more of a fight to sort of reclaim some ground around here, but it's just not. It's like trying to what? Oh, sorry. It's like watching a old racehorse trying to race again. I mean, we had a little bit of a push here, and then it just collapses and starts running back down. Really not good. It's quite sad to see. Yeah, no problem. Platinum's getting a good reading, but I don't trade platinum either. I'm not even sure. I think it's XPT for platinum, isn't it? Yeah, there we go. Look at me learning my tickers. That was a horrible trade. I'm not sure if I took that or not. It's a while ago. No bien. Let's clear that. Okay, so actually the technicals look pretty good here. Maybe I'll have to look at platinum. Unfortunately, no entry, but this would have been really strong. I might still pay attention to this. So if we could get this 50% pullback, so maybe we sort of reject these lows and come back lower, then climb higher. I don't know. We'll see. But yeah, technically, this is probably the only thing I could really get into. So we're getting a score of 9. So it's pretty strong. So if you didn't want to be super aggressive with risk on positioning of obviously the Russell, the Dow, the S&P, and the Nasdaq, platinum could be quite a good one, especially if if you trade CFDs, your broker likely is going to be platinum against the US dollar. Similar to gold, silver, could be a good one to buy, obviously benefiting from that dollar weakness and relatively strong platinum fundamentals. Excuse me. I think Bitcoin. Oh, I saw a post the other day. A guy lost like 70 million buying Bitcoin. Insanity. And it's funny. He lost 70 million. I think he reloaded with another 4 million. Crypto world is just different. You'll see people in FOREX or even futures trading or options or whatever, trading a couple of thousand. And you're like, wow, that's a pretty big position size. And like Nick, you might see Nick have a 50K take profit or whatever. That's, obviously it's good money. But you look at the crypto world, there's people trading with millions. It's incredible. Obviously, a lot of them are going full margin, which, makes sense and leverage, but it's a different world. Crazy to see. Anyway. I don't really know what's going on with crypto, or specifically Bitcoin. It's not my bag of tricks. But if the Edge Finder's given us a bullish read, it's only 7, so it's not overwhelming. COT actually is bearish on Bitcoin. Retail positioning is long Bitcoin, which makes sense. I mean, isn't retail always long on Bitcoin? So that kind of puts me off actually buying it. But I don't mind this. Technically, it looks okay. So again, we'd have our stop just below these lows here, just again to allow some breathing room. Take profit. I've got no idea. I don't really know where Bitcoin could go this year. I'm not a Bitcoin guy. Seems to be maintaining this trend line pretty well. Don't really trade trend lines though, so it's pretty meaningless. Yeah, to be honest with you, that's all I can see here. Quang, my week has started terribly. Thanks for asking. How are you? Best broker to trade stocks? Webull, I guess. If you check the description of the stream, I'm fairly sure there is a link to Webull. That I know Nick uses Webull, so I would assume they're a good broker. I've never used them personally, so I can't advocate for them, but they seem fine. Okay. Let's just have a look at COT data. What have they been doing? So they're still yen long. Where's the dollar? Yeah, dollar's 50-50. Interesting, actually. The Swiss has been sold off. Reduced almost 4%. That's quite big, especially to say that we're in times of uncertainty. I would expect the Swiss to sort of stay stable. But I guess it's quite elevated. People might have a bit of fear about the Swiss continuing to gain value, then getting stuck in an intervention by the S&B. I don't know. What else is there? The dollar. How's the dollar doing? Actually gained slightly here, 0.65, nothing major. I know we looked last time, or not last time, we looked previous at something that one of my friends said. Is a friend of Nick as well, I think. He's called Daniel Emerson. He's a great guy. But anyway, I saw a reel by him, and he's pointing out, I mean, it's quite obvious actually now, someone now been showing it, but I never really noticed. This 50% level on COT history is pretty much a support line for institutional positioning. Every time we've come below this 50% level, we've popped up quite quickly. I mean, here, maybe not so much, but these pops to the upside have been quite aggressive. So, you know, obviously I'm not saying this is something you would trade from, but it's something interesting to just look at. Naveen, we've discussed dollar CAD. I might go over it again in a bit more detail shortly if we run out of things to talk about. Just to quickly recap dollar CAD for you. I would be looking to go short. The oil is pretty much consolidating sideways on the H4 daily and weekly. The dollar, or the US dollar, is not looking good. So if you're trading dollar CAD, it would more be trading a very weak currency against a pretty weak currency. You know, for me, there isn't a whole lot going on there. But momentum is very clearly to the downside, so you could probably benefit from momentum. When talking about consistency, what will you say about currency and currency pairs? I'm referring to if I am to focus / consistent on one market. Well, if you want to only trade one market, you need to have an extreme amount of knowledge on that market, because there is no point trading just one thing and having below average information. So that's the only benefit of trading one asset. I'm not an advocate for trading just one thing. I think that's really limiting. I think you're putting all your eggs in one basket, really, because if you learn just one thing, so let's say Bitcoin here, if you only trade Bitcoin, for this period, depending on your strategy, but generally you're not going to be able to trade this. So that whole period you're making no money and there's nothing you can do because you don't trade anything else. So if you are going to do that, which is just trading one asset, I think you need to, again, understand everything. What cogs are moving? Why are they moving? How did they move in the past? Why did they move in the past? When did they stop in the past? You need to have the statistics. So, for example, I trade Eurodollar specifically. Mainly. That's what I watch day to day. I still swing trade pretty much anything. But Eurodollar is my main thing. So I know the stats in Eurodollar. So, for example, if Eurodollar opens with a gap on market open after the weekend, there's a 63% probability that gap will be closed by the end of Monday. So that's basically, I know Eurodollar. I've got a whole sheet of stats. Actually, you know what? Let me see if I can find it for you. I've got no idea where it is, so I might not be able to. I can't remember where I saved it. Just give me a second. It's interesting though, because there's a lot of information. So for these stats, I did verify them myself, but I didn't actually develop them, if that makes sense. I didn't go in and do everything myself. It might be in this one. Yeah, I can't find it. Anyway, so yeah, back to the point. I think if you are going to do that with trading one thing, you either don't do it and learn or trade everything, or be the expert in that field. Found it here. So this is a list of stats. So we can see euro dollar price action and session stats. New York breaks a London high around 62.5% of the time, making it making it a useful breakout continuation session. New York breaks the London low about 57% of the time, or rounded up 58. Mean reversion tendencies. When euro dollar opens with the weekend gap, 63 to 68% probability. Sorry, I got mine slightly wrong, but it was close enough. Euro dollar closes outside the Bollinger Band. Price returns to 20 EMA within 2 days in 72% of cases. So it's things like this. I mean, if you're going to trade something, you may as well trade it well and know it. Alan, hello, Alan. Actually, Alan will be coming to take over the stream in 15 minutes, I think, if I'm not mistaken. Unfiltered, I'm going to say this with love, but please listen. I've told you this twice now. Check the description of this video or this stream. There is option. You've got stock and ETF broker, which is Webull. There was an advert for them when you were still asking this question when I came on. There's also a CFD broker. I think it's either Vantage or Wanda. I can't remember which one Nick's with at the moment, but one of the two. Euro dollar. Euro dollar. Don't even talk to me about euro dollar. So the thing is, and this is exactly what I was saying earlier about the markets just not really aligning with the way I trade. So fundamentally, actually, hold on, sorry, it's changed. Euro dollar is actually pretty neutral now. However, last week is a great example. Euro dollar was pretty bearish fundamentally. It had a score of so on the econ list, which is only the economics, it doesn't take into account sentiment. So on the econ side, I think it was -6, -5, but euro dollar was rallying. And it's the same thing. Euro dollar at the moment, like a lot of markets, are not being driven by traditional or typical fundamentals. So you can sit there, as I was saying earlier, and say there's central bank doing this or inflation differentials here and there. It doesn't matter because the markets aren't moving from that right now. The markets are pretty much moving from solely risk sentiment. And when I say markets, I'm talking specifically currencies. So yeah, it's one of those situations. That's some detailed research. When I scalp, I use currency strength to scalp. The pair works fine. Yeah, currency strength is a great one as well, actually. I do quite like to use currency strength. I don't trade from it specifically or solely, but I do pay attention to it. Bearish on gold short term. It depends how short term. Excuse me. If you're talking short term as in the next couple of hours, yes, I'm a little bit bearish. I think we might have exhausted this move now. But actually, having said that, we do have Powell coming on pretty soon in just under an hour. So that could shake things up. So I could look stupid and we could see a continuation of gold higher. But just based on technicals, it wouldn't be a surprise to me if we do see gold come down a little bit, start correcting some of this move, then we start climbing higher. But yeah, that's just my view at the moment. Yeah, Kwang, I'm not saying bearish as in a bearish trend. I mean, when I say bearish in the next couple of hours, I mean sort of a pullback from this move we've had. I think it's a little bit extended now, a little bit exhausted. Yes, I'm still in the short. Begrudgingly so. I think I'm going to close out pretty soon. I've already accepted 3 positions as a loss, and to be honest with you, I'm not seeing any recovery at all. So this might actually be one of those rare situations where I have to just call it a day and just reposition. Oh, that's true, Royal. I forgot to mention that. Yeah, I am doing a 24-hour live trading stream on my channel on Thursday. So I'll be live from 1:30 p.m. UK time Thursday until 1:30 on Friday. So I'll finish the stream with NFP. So it should be quite fun. So yeah, we'll see how that goes. I mean, to be honest, you might just see me sleeping on stream. I don't know. I'm an old man now. I used to do night shifts, and one of the reasons that really made me leave work was those night shifts. So, not sure I can hack those anymore. Yeah, I don't think there's really anything else to discuss in terms of the markets. Euro Swiss is horrible actually right now. This is a horrible range. Dollar yen seems to be respecting the support line, to be honest. So to be honest, I really like this idea. So this is my plan, and I'm going to say hopefully. Hope is a horrible word in trading. You never want to rely on hope, but in this specific case, I'm okay with doing that because it's me. I'm a bit biased. Hopefully, we get some sort of hawkish remarks about something to drive the dollar slightly higher, just temporarily. Then we can do this. That would be sensational. But, realistically, I don't think that's going to happen. 24 hours. Yeah, I know. It should actually be not that bad because I'm saying I'm an old man now. I'm going to get some people on with me on the stream, sort of like how we do here with guests and things, but mine will be a bit more primitive. I'm not a professional streamer like these guys, but yeah, it should be cool. Going to get some people on, do some giveaways, and obviously the profits that are made on the stream, if any profits are made on the stream, 50% will be given away to a viewer. Do you get to watch me shower? I told my girlfriend about the stream. She wasn't happy about that. She was like, "Hey, you're not going to shower for 24 hours." And I was like, I didn't really think about that. I don't know what I'm going to do. Because I'm a bit of a fatty as well. So, you guys might see me order a pizza and stuff. So, might put a webcam in the bathroom as well. So, I can actually be live for 24 hours. I'm joking. Obviously, I'm not doing that. I don't think that would be very good marketing. Okay, so euro dollar seems to be exhausting a little bit here. As I said, similar. Well, actually, gold seems to have a little bit more steam than euro dollar, but I really like this. I'm biased. As I said, I really don't like euro dollar at the price it's at, but the markets aren't driven by what I like and what I want. So similar to dollar yen, if we can get something from Powell that's going to just bolster the dollar temporarily, I actually will exit all of my short positions at this low, or to be honest, actually at this point, wherever I can. I'm just trying to minimize the damage at this point. Then I'm actually going to reposition and start buying euro dollar for swing trades, not DCA. But I've got a lot of trades I really like gold long. I love it. Euro dollar long, I don't love it, but I will do it because that's what the data is telling me to do. Euro pound shorts, love it. Pound dollar longs, love it. Not really interested in New Zealand dollar long. Dollar yen long, love it. Euro Swiss is horrible. I'm actually not remove that. And US 30, I'm not really that bothered, to be honest. Yeah, I wouldn't be too upset if that just runs off without me, to be honest. Do you short or long US dollar? I think US dollar might become bullish after Powell's speech today. That would be nice. Reality, probably not, to be honest. I think we're just going to have a repeat of the same stuff we've heard on repeat. It's just going to be, we're not sure. We've had a little bit of disinflation, blah, 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 blah. Uninteresting. It's not going to benefit me in any way. So generally, and this isn't, when I say generally, I'm ignoring tariffs. I'm talking when we're in quote unquote normal markets, when it's just normal, central banks are driving the markets, expectations, normal stuff. That's when I'm specifically pretty much only long dollar, because the dollar, or the US, how can you bet against it? Historically, betting against the US has been a terrible idea. So that's an edge I have in my playbook. Another thing with euro dollar, this has actually been a bit of a different situation. And it's a good example actually to prove when it doesn't work. But historically, actually, you know what? I've also got the stats on this. Let me just see if I can find it. Sorry, I know I'm pausing a little bit here, but I really like the stats I gave. There we go. So this is a good example. So this is another reason that Eurodollar shorts are pretty much all I do. I've got a list here, but this is it. So 9/11, obviously I hope none of this gets censored or anything, but 9/11, Eurodollar short-term rise, but it fell after. 2008, obviously GFC, Great Financial Crash. Eurodollar fell from 160 to 123 in 3 months. The Euro debt crisis, and these are all like black swan events when the markets are kind of shocked by something or affected severely by something. Generally, what I'm trying to say is it actually works out in favor for bears on Eurodollar. Eurodollar fell from 149 to 120. Brexit, Eurodollar fell off from risk sentiment. COVID, Eurodollar dropped from 1.12 to 1.06 within a few days. So being positioned short on Eurodollar generally works out a lot better for me, or from my tests and from my data. Also, the drops on Eurodollar typically are a lot more aggressive than the upside that we get. And again, that's what I mean by if you are going to trade just one thing, you should know what that market does, how it reacts in different times, what you can expect. Obviously, I'm not saying every day you know what to expect. No one can do that. But typically, over the past, X amount of black swan events, would I be positioned to win? Would I be losing? Would I not even be involved? How would I know that's coming? What does the market do after, before, those types of things? Thank you for the live. What is the strong resistance for gold? I don't know why I keep deleting the drawings. It's kind of annoying. So I suppose this level here. So this would really only hold, to be honest, if we get some positive dollar news from Powell. If not, then this is going to rally. And the next level of resistance is kind of here. That's kind of the only stopping point beyond here. You have the same setup on Nasdaq. Very nice. Recent scenario: whenever Trump opens mouth, dollar dips. Whenever Powell opens his mouth, dollar becomes bullish. Becomes bullish. Have you noticed that? Yeah, I suppose actually I've not really thought about it. Yeah, I guess you are quite right. Naveen, yeah, we will see. We'll see what happens. Sweet. So we've got the one and only Alan Perez coming to take over the show in the next couple of minutes. So if there is any questions for me, let me know. If not, you're in great hands of Alan. He's a great guy, great trader. He will be at your disposal. I'm not sure that's the right word, but there you go. So just to quickly remind you, we've got less than an hour until Powell speaks. We've got roughly 45 minutes, give or take. So buckle up, manage your stops, manage your risk. Don't get caught out with the noise, because it's possible we'll have something. I mean, obviously it's possible. I don't know what we're going to get. Prepare for the worst is the way it should go normally. Royal, yeah, I'll see you tomorrow. Yeah, I think Euro Pound's probably going to be the play I'm going to make next. Depending on what Powell says, it will be dollar yen as well. So these are probably the only two, Euro Pound, dollar yen, that are really primed for a trade. I mean, dollar yen's not technically ready for an entry, but I like the narrative for dollar yen short. Kwang, you too. Will there be wicks on pound yen when Powell speaks? My friend, I don't even know how to answer that. I don't mean that from a rude point of view, but what do you want me to say? Like, I don't know if there'll be wicks. Maybe, maybe not. How many wicks? What do you need the wicks for? I don't know. That's an odd question, I'll be honest with you. It's possible. So to try to answer your question, if there is bad news for the dollar, we might see an increase in positions for the yen, which could drive pound yen lower. So we could see some whipsawing, but I don't know. So that's all I've got for you, unfortunately. Also, I'll be in Miami on June the 19th till June the 26th. So if any of you guys live in Miami, let me know. We can go for a beer, as long as you're older than 21. Pound card. Pound card actually is following quite a nice uptrend here. As we mentioned earlier, the Canadian dollar is not necessarily too hot right now, especially with oil consolidating. So this looks great. As I was saying earlier, we'd be looking for this 200 moving average bounce or rejection that we've had. Oversold RSI, general momentum to the upside. The pound or the Bank of England seems to be cautious. Bank of Canada seems quite dovish. So this might be a pretty decent opportunity. Oh, you just entered a trade on it. Okay. Well, that makes a bit more sense. Yeah, I mean, entering a trade right before a Fed speech is brave, to say the least. To put it nicely, it's brave. Okay, guys, Alan is ready to take over the show. So thank you all for being with me today. You're all great people. I'll see you very soon, I'm sure. Don't get margin called. I'll see you all soon. Enjoy the rest of your days and stay safe for Powell.
If you're someone watching the show right now and you're outside of the US looking for a better brokerage, listen up. I wanted to take a moment to mention today's live stream supporter, Vantage. Vantage allows traders outside of the United States to trade CFDs. You can trade everything from commodities like gold, you can trade US indices or global indices, and you can even trade FX all under one brokerage, and you can connect to MetaTrader 4 and trade directly on tradingview.com. Not to mention, they also have a really good sign-up bonus going on right now. So we'll drop the link to that down below in the chat as well as in the description of this live stream. Check out Vantage. Now back to the show.
Hello, everyone. How you guys doing? It's been a little while for myself. I feel like today has been a big catch-up day. I've been away for a while, for 9 days. And I didn't have signal for most of those days, so I was missing out a little bit on what was going on. So this morning, I got into town. I got home at 1 a.m. And then this morning, I just spent it kind of just recapping and finding out what's been going on while I was gone. Hey, Quang, how you doing? So, yeah, it seems like I'm starting to kind of get a feel for what's happened. Usually when I go on vacation or I'm away from markets, I give myself about a couple days to a week to just kind of get back in the groove. I've made mistakes in the past where like you leave for a while, you come back, and then you kind of just, don't really know what the market cares about or whatever. But from my understanding, nothing much really happened. I think FOMC was pretty like, I think they said something about, I have it written down here, unusually elevated. Uncertainties were unusually elevated. Which is, kind of similar rhetoric as what they've been saying before, is they want to be more cautious. And then actually something that happened was the U.S. court ruling that they went ahead and what did they do? They invalidated many tariffs that Trump was doing. But then he went ahead and I think they're going to appeal those. So we'll see how that plays out. And then I saw that Trump and Xi are going to go ahead and meet this week, according to CNBC. So kind of just reflecting on what's been happening, earlier in the year up until now, a lot of the news flow has been tariff related, and if deals are made, that's really bullish for certain asset classes, really risk on, and then if they fall through, then it's obviously very risk off. So if we do see that meeting, if the correlations and the way things are moving are pretty much the same since when I left, we could see risk on, so more equities doing well. We could see the dollar doing well as well, because, traditionally the correlation is stocks up, dollar down. But as we've seen this year, stocks up, in the beginning of the year, we had the whole Trump trade, stocks up, dollar went up as well. And then when all these reciprocal tariffs came into play, the big demand for safe havens we saw stocks go down and also the dollar go down as well. So that's pretty much the correlations that I'm playing with for right now until things shift. But yeah, that's what I was pretty much looking at. It was just news flow to see if anything crazy happened or anything that I've been missing. So for those that are just curious as far as the process of that and how that looks, pull up Financial Juice. This is a free website that has a lot of information that you can reference. This is like the main tab here, but you can also kind of go down into like commodities, crypto, equity specific, Forex specific is what I like to read. And then, there's a lot of reputable sources. So FX Trade is a good one. Forex Factory is somewhere on here as well. So that's kind of what I look for. And so I just kind of read what I can, what sticks out to myself, and then just go from there, try to get a feel. But for the most part, James, congrats on moving to the A1 staff. Alan, great to see. Thanks, man. Yeah, A1's a good company. They we share the same mission, and look, markets are really hard to navigate, especially on the retail side when you're working at an institution or just any firm with resources or whatever. It's much easier, but it's still difficult. So you could imagine how difficult it is for retail that doesn't have certain software solutions or whatever. The playing field is not really even. So part of my mission, and when I transition to retail, is to help aspiring traders get a fighting chance to navigate markets the same way other people would. And so I always vouch for promoting any tool that works and that's reputable and trusted and that can really have a positive effect on people's performance. So yeah, man, it was a good match, and they've been well. They've treated me well in person. I've met the staff there, all of them, awesome people. So I'm really happy to be working with them, and honestly, it's just a way for me to give back. Alan, make some calls and get EU to 09. Yeah, man. So on the Telegram, so I was catching up this morning. And so I was just going through charts, and this is one thing I shared on the Telegram. And James, I believe you're in there, so you might have seen this already. But for those that don't know, I'll be posting in the Telegram as well as in the A1 Discord, and my signals will be on the A1 Discord as well, so you can kind of see that. But one thing that caught my eye, and I was somewhat wrong in this. So EU right here was testing this level 4 times right after we broke the recent high. This was like the worst case scenario. 1, 2, 3, and 4 times we tested that level. And basically what I was saying is there's a lot of flow news for the euro, right? We kind of put some support here at the 50-day moving average. We got to this resistance level. If we were to get a bad PMI print today, then there could have been basis for the euro to continue up and hold above this level. We got the bad print, but we didn't do that. So it seems like this level is going to pretty much hold. That would have been a good reason for the euro to kind of break past that level. If we close above it, retest it. But, if I look at the price right now, let me see what it's doing. It's not really doing that. Now, it's too soon to tell, right? We still got a green candle here. But yeah, my thought process was if we get a weak print for the US at 9 o'clock today or 10 a.m. today, we could have, go ahead and break past that one. But we didn't see that. And the euro, they have some figures tomorrow. I think they have their CPI tomorrow, which is expected to come in lower than expected. So that could also have basis to kind of, or this could be the reason why we haven't really broke above it yet. And if it does come in lower than expected, obviously we all know lower inflation, lower CPI. The traditional correlation with that goes, lower currency pair. And so if that happens, we could see this level hold. And then we do have like job figures coming in. We have JOLTS, NFPs on Friday. We have a PMI that's supposed to come in better than expected at 52. So we'll see how that goes. But James, I'm kind of in the same boat with you as well. I do think that this thing is stretched out. We've been consolidating. Usually when there is a flip in trend, there's a consolidation for a while. Like we never just rally, and then just V-shape down. It's always like rally. We pause, we consolidate, we start shifting, and then we kind of start flipping down. So longer term, right? Especially once we get all these dollar rate cuts priced in, if that is going to happen, then yeah, we could see this thing hold. And if you're looking at this thing long term, this could be a good entry. If your approach is dollar cost averaging, this could be a good a level to go ahead and take an initial position. You can have another sell right here, but yeah, that's kind of my thing for the euro. I love to test the 200-day moving average, like you said, James, at 109 or 108.5 around this level. There's still a lot of pockets to be filled in this area, so that's kind of what I'm thinking of as well. But it's just a matter of finding a good entry, especially if we go to, let's see, I saw this earlier as well. I posted this in the Telegram. EU, where are we at? Come on. EMAPS, there you are. Yeah, look at this thing. It's bad. They've been getting some bad prints. This is a +1 because the US had a bad one today. But for the most part, if you just look at the EU impact, it's not really good. And if you look at the other ones, now whenever I place a trade or I'm positioning for a trade or looking for one, I like to look at what's going for me, but I also want to look what's going against me as well. So let's look at the eco surprise meter here. We got other counterparts like the pound, right, which is a similar. It's not like a mirror, right, but it's a very similar economy, similar area, things like that, doing pretty well. You have New Zealand's doing really well as well. Canadians actually doing well. So a lot of the counterparts, and then if you look at just the German equities, they're thriving. They're pretty resilient in that market as well. So that kind of gives me that cautious, which is like why I wouldn't just go full blown and just start entering right here. I want to wait. I want to see some pretty like obvious patterns or pretty obvious price action to go ahead and say like, okay, this is holding. We're starting to flip down. I would honestly, like if this level holds, I'll short it here, sure. But let's say we break above here and this and this and that. I would much rather be more comfortable selling after we've broken down this level and kind of just trickle down here and stay below here than just straight up shorting right here. Because if we just straight up short right here, it is a higher price, but we're still uptrend, characteristics. We're still in the uptrend characteristics. So I would actually feel better shorting after we've solidified that this is no longer something that we can go above. We can just stay below here and start, trading down. Once we get that and we're like below here, making new lows and stuff like that, then I can go ahead and target the 200-day with more confidence than just shorting it way up here. That's just how I would view it. But yeah, I really think that the dollar depreciation won't stick too long. Like once we hit these new lows, if we do hit that, I think Chris Pulver said something like this, but this could be a trap, right? This happens all the time where you get like a little bit of fake out and then right there you kind of go ahead and just flush right up there. So that's kind of what I'm looking at. This 50-day moving average was held up pretty nicely here. So yeah, I think longer term, just to kind of get a glimpse as to, we're doing a webinar on June 16th, basically going over like, what we've been doing for the year and how things are going to change and what we're looking for. I do think that, second half dollar wise, maybe we may not get a huge rally up or a huge flush lower, but I think it's pretty probable that we just kind of chop around for a little bit for the dollar at least. So that is my opinion on that. But let's go ahead and look at the dollar Swiss. Dollar Swiss is a pair that I like. We know that the Swiss doesn't want to. So this is like, think of this as an inverse, right? So if we look at like a Swiss future chart, the Swiss, they don't want it to be super strong, right? So if it gets super strong, they could intervene. So that's why I do see that. I do think, in my opinion, that the downside to the dollar Swiss is kind of limited a little bit. We've been in this range. We kind of broke below it. I'm curious to see if this is going to be a fake out. I don't really use trend lines in my trading at all, but we did see this bearish trend line here. We broke it. We've been kind of staying above it. So I'm curious to see if we hold above. If not, we could just go ahead and test this level, the 8100 level, that would be a good level of support, especially knowing that, these are intervention levels for the Swiss. I could probably take a stab at the 8,100 level if we do get there, with a pretty good risk to reward, honestly. So that's kind of how I look for the dollar Swiss. Dollar CAD, not a big fan of the price action. Thank God I got out of it for a profit when I did, because this is just ugly. My thought process before was like, let's just go to weekly time frame, because the price action is cleaner on this. But weekly time frame, this is it right here. I was thinking, my thought process, especially with the correlations with oil, that this level was going to hold. This was previous resistance 1, 2, 3, 4, 5 times, and then we went ahead and broke past it. I thought that this was going to be support, but look at this. This is ugly price action. Let me get rid of the small one here. This is just bad, right? And then we broke below it. So yeah, I don't like the dollar Canadian at all. Look at this. If this was so hard to trade, right? We were just kind of trading lower, while dollar yen and dollar Swiss were chugging higher. Relative strength wise, dollar Canadian was really, really weak, and then we just kind of had a big old pop, and then we just kind of right at the 200-day we rejected it. So not a big fan of this one. I'm going to ignore the dollar Canadian. Dollar yen as well. I think we could probably test the 140 if we see the dollar index kind of go back to test these lows. Then yeah, dollar yen could go ahead and touch the 140 again. And I don't know, maybe we could, depending on how things are going, this could be a good level to buy again, right? So this is one I called out in my video like 2 or 3 weeks ago. I was long this thing. I kept adding. I got 700 pips out of it, but the actual move in total was a lot more. Yeah, like 870, almost 900 pips. This was a good trade for me as well. Super good technically. It's still a good level in my opinion, unless we always want to make sure that the sentiment and things are in line, right? But if things are pretty, things don't change that much, I believe this is a good level to go ahead and re-enter again, longer term. So yeah, my whole basis for this trade was weekly level right here of support. 1, 2, 3, 4 times now that it's acted as support. I was anticipating some positive developments in tariffs, and we got that because we got a glimpse of India having talks, and then we saw that the UK made that deal, and then the China thing, so that really propped this thing up. So we'll see, right? Maybe this could be the same kind of cycle of news flow we had. The Trump went ahead and said that China went ahead and violated the agreement. That can cause this thing to go lower. Let's say nothing happens. Let's say we got Fed coming in later. We have NFP jobs data. Maybe this thing comes lower. We find support here, and then we get the same kind of news cycle again, news flow of like, all right, now we're making developments with other countries. Things are looking good. This and this and that. That could go ahead and be the same kind of play that we look for and kind of buy this thing at the 140 handle. So that's what I'm looking for. That to me, that's a good setup. It worked in the past. Perhaps I don't shoot for the same 700 pips, but maybe I shoot for this 50-day moving average here at the 144. If I get filled at 140, that's still 468 pips, 500 pips. I'll take it, not bad. So that's kind of how I'm looking at it. Equities, I know you guys love equities. We're finding support at the 50-day. Maybe we can, this level of support, if this thing kind of, starts updating here and kind of trails it here, this could be support at the 200-day moving average. And we could just chop around here for a little bit. That's kind of what I'm thinking for U.S. equities. And I don't know if we do break new highs, I don't know if it's going to be sustainable. I think we might just hang out here for a little bit. Same thing with the S&P 500. We found support in this area. If you're buying it, I would take profits at the all-time highs. I wouldn't get too greedy and think that we're going to be chugging higher all the way up. Let's see, gold. Gold is one of the things I posted in the Telegram as well. So let me go down to the 4-hour for you guys. Gold, we have this unfilled gap here on the spot chart here for Rwanda. But yeah, I think so. With gold, we all know it's a safe haven asset, right? When there's uncertainty, the demand for safe havens comes back into play. We got a little bit of that when the whole Trump and China back and forth thing, but kind of going over it in the same thought process as like the dollar yen or the dollar index. Let's say the uncertainty stay around for a little bit, we get a bad NFP or whatever, and then demand for gold happens. If sellers step in here, right, and then we get more news flow that, okay, relationships are getting better, deals are being made, then we could have that same news cycle and kind of, sell right here at this level, in my opinion. But selling gold is always really, really hard. I would rather buy it. So let's say we do get the selling thing here, and if we kind of test back into the support level, I'd rather buy it here than sell it here, because all it takes is one thing, somebody to say one thing, and gold shoots up. It's one of those assets that if you just go on a weekly, I mean, come on, you can't short this. You can't, especially after these strong candles here on the weekly. Like, it's not wise. So if we do start seeing some selling pressure here at this handle, the 3,400, is that what it is? Yeah, 3,400. If I was a gold trader, I'd rather just wait for a buy, in my opinion. So yeah, any questions for you guys? I don't know how many people are in here, but if you guys have any chart markups that you would like for me to go over, I'd be more than happy to do so. Let's see. I was looking at the price action for Aussie. Not a big fan of this at all. To me, this is no man's land. I wouldn't trade the Aussie. New Zealand either. Like, if it pops above this, I don't know if it's sustainable. Especially if we see the dollar kind of find a bottom or a bounce, then I don't know how I would like this. I think the New Zealand dollar could kind of fake out and then kind of flush back lower, but still the price action, I'm not a big fan of the price action. Pound dollar is pretty strong. We saw that on the edge finder, that the surprise meter, let's see, where was it at? Pound. Yeah, 86. Look at this. This is really strong, right? It's beating expectations. We could go ahead and tap this level, the 1361, 1362. But longer term, I would like to, and I hesitated when this happened, but I like to buy this thing at the 1.3200 level. That'd be a good buy for me on the pound. Let me fix this zone. But yeah, let's go ahead and look at the VIX lower, sub 20, which I don't know. I think we could get a pop in the VIX again. I don't think it's over just yet. For me, for this uncertainty to be done with, deals need to be signed, like the UK. And both countries, both sides need to say there was a deal made, blah, 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 blah. To me, that would be the end to all this uncertainty. Bitcoin, actually, I did see that Bitcoin hit the 110. Dang, it made a new high. I didn't know that. I don't know. I'm not really familiar with Bitcoin. I don't follow it like that. But from my understanding is that Bitcoin, brief pullbacks get bought into. And right now we're at a level where, this 50-day, if buyers step in right here, then we can just keep chugging higher. Especially if we get risk on, then yeah, that could be the case with Bitcoin. So that's really interesting though. I don't know it was that resilient. Especially the way I think of Bitcoin, I feel like there's two crowds with Bitcoin. It's the ones that are like super bullish, super long term. It's going to replace everything. I understand that. I don't disagree with that. I think longer term, yeah, it could be, a super reliable, safe asset, kind of like gold. But the way I view Bitcoin is more of a luxury asset. So like everyday investors, if they ever have extra cash to put to work after they've paid for what they need to and their needs and traditional investing, then they dabble into Bitcoin. I don't think it's one of those like household traditional things like buying the S&P or something like that, or buying Walmart or buying whatever. So to see Bitcoin pretty resilient, that's pretty cool to see, actually. Oil, what happened to oil? Yeah, we're still at this level. So this is kind of the premise of why I was going long dollar Canadian. Oil was rejecting these levels, and this thing was lagging. It was not moving at all. So thoughts about DXY for the long term. So DXY, DJ Gaming, a lot of people say that the dollar is doomed longer term. I don't think so. In my opinion, they say the dollar is devaluing and things like that. But if you look at the price of Aussie dollar, right? Look at the price of New Zealand dollar. So look at dollar yen, look at dollar CAD. I don't think the dollar is going to be gone for the long term. I think that once all these rate cuts are priced in and everything like that, then we could probably chop around. But I could see dollar staying above 100. I don't think it's gone forever, like people say it is, especially not in the near term. And by near term, I mean like 3 to 5 years. 10 years. I don't think that's gonna happen. I was gonna look at CME Fed Watch tool. I haven't looked at that. And I got 5 minutes left, guys, I believe. So if there's any questions, gold plus 2.5% today. All right, so June, 95% chance nothing's happening. 75% chance nothing's happening in July. 23% are thinking that it's going to be a cut. September, that's when things change. So yeah, this is pretty kind of the same as last time I checked before I left on vacation. The first rate cut is set to come in September, per like most of the people. December. Let me get a quick gauge for those that are still here. I'm curious because I see oil. Is oil an asset class you guys really follow, or what asset classes do you guys really want to see? So I asked that because I just became part of A1 Trading, and so I primarily trade currencies, right? That's where my income comes from. That's what I do. That's my bread and butter. But to say that I don't look at other asset classes is very foolish of me. So although I trade currencies, all markets are intertwined. They're correlated in a way. And so I consider all of them. So when I'm trading currencies, I'm looking at the 10-year yield. I'm looking at bond. I'm looking at gold. I'm looking at oil because oil, has something to do with inflation. It all trickles down. They're all correlated in a way. So I do look at them. And if you guys have a certain asset class that you guys really enjoy, perhaps I can share my thought process into that. And if I don't know, then I'll just continue doing the currencies and the gold and the Nasdaq. But if you guys, really like a certain asset class, I'd love to continue or, start implementing that in the analysis part of the Discord and the Telegram. That way you guys kind of know my thought process and see what happens. DJ Gaming, what happened after rate cut? What happened? Nothing happened yet. So there was no rate cut yet. But markets are forward thinking. So if a rate cut is anticipated, most likely than not, then the market will price that in. And then if there's a surprise after that, like let's say the market prices in a rate cut of 25 basis points, but then it was actually like a jumbo cut, like a 50 basis point cut, then you could see the dollar drop even further. Or if it comes in line, then nothing will pretty much happen. And that's why a lot of these news releases, nothing happens after the thing comes out because market's been priced in. I think I got a notification on Discord, but I can't see it. Unless it was something else. I think it was something else. Someone asked, what am I looking to trade this week? It depends. I don't know. So like I said, I just got back on vacation. I don't think I'm going to be active. I'd rather just sit and wait and see what's going on and see how, news flow is and things develop and how price reacts to certain things. When I do jump back in, I'll probably be trading euro dollar, pound dollar, or dollar Swiss, or actually dollar yen. If dollar yen kind of finds this 140 handle, And like I said, it's the same kind of cycle as far as news flow and things like that. Then I'll probably jump back in dollar yen. But yeah, that's what I'm going to do. And I also need to make arrangements. So I'll probably have, I got a partnership or working with Oanda. And so I'm going to be registered under their firm with the NFA. And so for compliance reasons, I need to, switch accounts or move things around to stay compliant. So yeah, I'm definitely not going to be, active in the markets for at least the first half of the week until things or changes are made. But yeah, if gold gets up here, that'd be cool to see what happens there at that level. Dollar Swiss, if we can get down to this 8,100 level, that would be a really good buy opportunity for me personally. Dollar yen at the 140 handle, that would be pretty nice. I'd like to see how the euro reacts to this level. Let's see if we're going to reject it on the daily. If you see this 4-hour close, if this this closes bearish, and then depending on what happens on the Fed Powell meeting, then perhaps this level of resistance can hold and we can start going lower just a little bit. But I think my time is up, guys. If I can get a confirmation from Chandler James, I think this is the end of the stream. I hope you guys enjoyed. I'll see you guys tomorrow, Tuesday, as always. I've never ended a stream before, so I don't know if I just close out or how that'll work.
Hey, Alan. Sorry for the delay there.
Oh, you're good, man. How's it going?
Doing good. And I saw your post this morning, so things are looking good. Shout out to you for your Telegram posts. We just started sharing those, and then inside of the group we'll have your trade alerts, which is really exciting. And thanks for taking over the stream for a little bit. I'll let you go, and I'll take over from here.
All right, Nick. Well, thank you guys for having me. I'll see you guys tomorrow. And you guys have a blessed day. Thanks for giving me your valuable attention. Bye-bye.
See you, Alan. Awesome. Yeah, guys, if you want to keep up with Alan's analysis, he's been posting it now in our Telegram channel. If that's something that you're interested in, it is completely free to join that. We'll drop a link here in the chat to where you can see that. So you can see there's Alan's analysis that he did this morning. He's very focused on FX, which is great because it kind of complements like what I do, which is a little bit more focused on indices and commodities. Like I'm looking at gold a lot and oil and the Nasdaq and all those things. It's nice to have someone who has a bit of a more FX focused person to kind of round out the analysis. So like I said, completely free to join. If you haven't joined our Telegram channel, take a second to do so. And we've got just a little bit here before we are hearing from Jerome Powell, which should be interesting. We'll see if it moves markets at all. Stocks are back up in the green a little bit here. Nasdaq up the most of the major four. Russell Index also doing okay. Still just sitting in this trade the last few days. Not too much movement. Gold is probably the most impressive mover today. You've got a nice push. And we are back above that level of resistance, that level being around 33.60 here. Nice little push so far in today's session. And I guess the big question for gold will be, whether or not it can actually hold these gains that it's made. Because again, you've had this big pop today, this morning, nice little push to the upside. Now the question is, can it stay there? Or is this kind of a bit of a fake out motion? Like if you get a close that looks like this today, then to me, I wouldn't read too much into that pop to the upside. But if we close, higher or where we're at right now, to me, that would signal strength at a key level of resistance. Which in that case could suggest like, okay, we're headed maybe back up to these previous highs here, 34.20. And we'll watch it from there. If you have a chart request, if you're looking to take a look at something, please drop it in the chat really quick. Jip Smith says, let's take a look at oil. Oil is actually just going crazy today. Look at this, 4% almost, 3.86%. And I made this comment earlier about oil. You're sitting at a level of resistance around 64. This chart looks technically very bearish, but fundamentally, I really like oil to the upside. If I take a look really quick at our commodity scanner, most of our indicators that we focus on are pointing towards bullishness for oil. That is, except for this morning, we had manufacturing PMIs, which were actually negative for the price of oil. Like, for example, manufacturing PMIs this morning were forecasted to be 49.3. Instead, they came in at 48.5. Is that right? I think that is right. Yeah, that is right. And so we had a little bit of a soft PMI print this morning. Regardless, though, most of our indicators are pretty strong for oil prices. We can also see this in the economic heat map. If we take a look here, you can see, oh, look at this. USD impact just went negative. Negative as in the majority of our indicators are suggesting bearishness for the US dollar. But what's interesting about that is that you can see the US dollar looks weak, but the US stock market looks pretty good on this list. What's keeping the US stock market up while the dollar kind of bearish? Right here, inflation data. If you're somebody who's bullish the US dollar, you want the Fed to not cut rates too soon. You think that they're going to, right? You think that they're going to hold rates as opposed to cut them. Anyways, inflation, the last round of inflation data looks better than expected. We had 2.4% and 2.5% for CPI and PPI, respectively. And then we came in and both of those were soft prints compared to expectations. Like, you should talk about other things in your life. Trading all day is exhausting. Trading is probably, what I do on the live stream is probably 90% of my trading activity. And so for me today is actually a long amount of stream time that I'll do. So 1 hour this morning, let's say 30 minutes here, so an hour and a half. The actual amount of time I do trading related stuff in a day is probably like an hour and a half. And then the rest of the day is software design, managing our team, content creation, administrative stuff for the company, just all sorts of random other things. Like right before this stream, I was mapping out with our intern possible internet options for our new office. So like, I have a day job. Anyways, we've got Jerome Powell speaking in 8 minutes or so. We'll see how that impacts markets. Stocks are pretty much flat here. I was going off of this oil concept. On a technical basis, still looks very bearish, but I like the fundamental setup. So what I'm looking for here on oil would be something like this. Breakout to the upside and some continuation. So if we get a solid close above 64, that is probably a signal that I'm going to be looking for buys. Let's just say, for example, you get like a push up to 66 or so. Any weakness off that, I'd be looking for continuations. And I've been saying this for a little while now. Like, I've mentioned that I've been bullish on the oil market for a while, but I haven't taken any trades. And sometimes that can be a little frustrating to be like, okay, I'm bullish on this thing, but I'm not taking any trades. But not taking any trades has been for the best because this thing has been really choppy here recently. And like I said, I think that the bigger picture for oil prices could be some nice higher lows, higher highs, and we may actually see this thing bottom out for the rest of the year. But I'm waiting for technicals to kind of align with my fundamental thinking. So we'll see. Chip Smith, we are looking at oil as you hit send on this message. I don't understand that one. Oil what? We're literally looking at oil. Nick, what do you think about the yen unraveling? Do you think we are starting to see the melt of the yen carry longer term with the Bank of Japan maybe looking at potential rate hikes? Reverie, let's take a look at the Japanese economic heat map. So we have had a little bit of a shift here, but let's go line by line on this and figure out what we want to think about with the Japanese yen. So if I'm looking at the Japanese yen, GDP growth has come in worse than expected. That's a bearish impact on the Japanese yen. Manufacturing PMIs. Now, if you've been listening to my videos, then you may hear me say, I've been recently bearish on the yen. But this is why systems matter, because right now, my system is starting to disagree with me. So I have to acknowledge that. I'll tell you how I handle that in a second. Manufacturing PMIs came in June 1st, higher than expected, bullish for the Japanese yen. Services PMIs 53.9, that's strong. Retail sales better than expected. Inflation at 3.6% and 4% for PPI. Those are year-over-year inflation numbers. Household spending pretty strong compared to forecasts. Unemployment rate 2.5%. Most of our indicators here actually kind of lean bullish on the Japanese yen. So what do I do with that? Especially considering I have two short positions on the Japanese yen as we speak. I'm long UJ and NJ. Well, I do have two long positions on these trades, which are two short positions on the Japanese yen. However, my impact chart now suggests yen bullishness. So I'm on the wrong side of a trade. So what do I do in that circumstance? If I'm short biased on the Japanese yen, but now my system is suggesting yen actually looks kind of strong. Well, this is just a way that I trade. I use a dollar cost averaging approach when I'm talking about FX. And so, yeah, I'm on the wrong side of this trade. What do I do? Well, because my position size is so tiny, what I'll do is I'll probably just wait for some kind of bounce, and then I'll look to close out for a possible loss. I don't have a rush to close right here. This is a very timing agnostic strategy. And so I am looking to get out of my yen trades. I'm also long NZDJPY. And so if we get a pop or a pullback in the yen, I'll probably use that as an opportunity to just exit my trades. So I'll keep anyone updated who's watching the Japanese yen trades inside of our Discord. Let me just pull that up 1 second. So I have several FX trades open. Any updates I make to these trades will be shared inside of our Discord group and full transparency with all of them. Like, I don't take 100% winning trades on anything. Our signals group is not some sort of get rich quick thing. It is genuine trading through and through, fully transparent. You can see everything we're doing in terms of entries and exits in the market. If that's something you'd be interested in, by the way, I trade indices, I trade gold, I trade commodities. If you'd like to sign up to get access to the signals, we're currently doing a 45% off discount as we speak. You saw earlier, if you've been watching the stream for a little bit here, you saw Alan on the stream. And if you watched since the beginning of today's stream, we also had Ivan on. You can actually see trade alerts from myself, Alan, and Ivan all within the VIP group. And for a limited time, we're doing 45% off our lifetime membership. Brings the cost down tremendously, and it's a one-time payment to join. You get access to all the trade signals. You get access to our chat rooms. You get access to our educational group, and you get access to our trade tracker, which will allow you to see the trades that we're taking updated every 15 minutes. If that's something that would be beneficial to you and you'd like some more information about it, we're doing 45% off during the duration of this stream. Click the link being dropped in the chat. You can see it on the screen right now, or head over to our website, a1trading.com/VIP, and you can chat with someone on our support team in the bottom right hand of the screen. One of the big things that I'm very, very adamant about is there are signal services all over the place. But what separates them, in my opinion, is verified results. So the reason I just want to show you this really quick is that when we share trades, myself and Alan, Ivan, we've been doing this for a long time. We've put blood, sweat, and tears into what we do, and they're backed by real results. So if you're interested in getting access to those trades, but you want to see first the track record, you want to see our results in the markets, this account since inception is up somewhere in the neighborhood of 240%. It is a live US regulated account, and I've tracked all of it from the start publicly on YouTube. So, and then we also have Ivan or Alan, if you'd like to take a look at his P&L statement that he shared, or his MyFX book, you can take a look at it there. If you have any questions about that, feel free to chat with us. Like I said, using the direct message link there. Or if you're on the website, just click this thing right here and you can chat directly to our support team about getting a membership. When you do that, by the way, just hit this 45% off VIP sale. It's the sale of the year event for VIP memberships, and you can get access there. I believe we have something here on the screen. We're waiting until we see Jerome Powell take the stand, and then we will we'll change over to that. Powell's not yet speaking. We're watching it on our end. Producers got it pulled up. We're just waiting to see. Dollar index tagging this low here around 98.4. Look at NZD USD breaking out here, trying to. Ivan's probably feeling great today. He has a lot of USD shorts. We talked to him earlier. Has a bunch of dollar shorts, Aussie dollar long. I think he has pound dollar long, and I know he has euro dollar long. So very nice move there on the dollar trades. If the actual is equal to the forecast, is it bad for the currency? Use of it depends which metric you're looking at. The economic heat maps that we've built will help you to better understand them. If you have access to the Edge Finder, you can always just track, for example, retail sales for Japan came in at the forecast was 2.9, came in at 3.3. How does that impact the Japanese yen? Well, it's bullish. What about the Japanese stock market? Also bullish, right? So we've done that kind of hard work for you. So you as the trader using our tools can just pull this up and you can map out, which things are strong, which things are weak for the respective currencies. That it's not going to move the markets as much. That is true. Probably true. The thing with Powell compared to Trump is that Powell is very, for the most part, very predictable in what he's going to say. He doesn't usually stray too far from what his planned statement is. Whereas when you're talking about Trump, he has his strong opinions. And when he says what he says, he usually says it in a very revealing way of what he's thinking, right? Or what he's feeling. And so that makes the market move more, because if you have this kind of delivered kind of corporate-y style way of speaking, like Jerome Powell, markets prefer that. They're like, hey, he's less unpredictable. Whereas if you're talking about Trump, it's all over the place in terms of how the market can react. Okay, we've got Powell taking the stand, guys. Let us know if you can hear it okay.
Thank you, Beth Ann. I guess I'd like to start by offering my condolences to the family and friends of former Vice Chair Stanley Fischer. Stan was a colleague of ours here at the Fed and a giant in the field of international economics. In addition to reaching the highest levels of the field in his own right, he was also a trusted and generous mentor and a teacher to a generation of the most important economic thinkers, including many heads of global central banks advisors to presidents, and countless economists. And I know all of us who knew him will miss him. So congratulations to the Division of International Finance, IF in these parts, on 75 years of outstanding work in service to the Federal Reserve Board and by extension to all Americans. Many current staff members are here to celebrate today, as well as a significant number of IF alumni, including past division directors Ted Truman, Karen Johnson, Nathan Sheets, and Steve Kamen. The division has also produced many other notable alums, including, not least, Chair and Secretary Janet Yellen, Professor, author, chess grandmaster, and our keynote speaker, Ken Rogoff, and humanitarian and economist Albert Hirschman, famous for the Herfindahl-Hirschman Index, and more recently, perhaps a little less famous, as a character in Netflix series Transatlantic, to name just a few. We keep close track of these things. In my time at the Fed, the IF division has provided invaluable insight into global economic activity, international trade and capital flows, and developments in foreign financial markets. Division staff have also played a key role during episodes of global financial stress. And your research and analysis are critical inputs into our monetary policy decisions. Thank you to all that have served in this division over the past 75 years. Today, I'll kick off this conference by briefly reviewing why the division was created in the first place and highlighting a few of its many accomplishments over the years before turning you over to a robust set of presentations and panels. So, the IF division was created on July 1, 1950, but the idea began to germinate a few years earlier. The US had emerged from World War II as a global economic superpower. The Bretton Woods Agreement placed the US and the Fed in a central position in the global economy. Our mission then, as it is now, was to serve the American people. But it was clear at that moment that the Fed needed to have better knowledge of global developments to achieve our dual mandate goals. A 1948 memo proposing to create the division stated, quoting, "Problems of international economics and finance have become increasingly large, complex, and significant in recent years, and our foreign economic relations will undoubtedly continue to give rise to issues of the first magnitude." That rare economic forecast that has turned out to be spot on. 75 years later, it remains critical that the Fed understand the policies and practices of other governments and central banks and their implications for the US economy and for financial markets. Exchange rate policy, of course, is now firmly in the hands of the US Treasury. However, the end of the Bretton Woods era in the 1970s fundamentally changed the conduct of monetary policy, as policymakers had to understand the effects of potentially more volatile movements of the US dollar on American families and businesses. Understanding global trade and capital movements has only grown in importance since 1950, as we saw during the pandemic. IF helps produce the data on international capital flows and has spent decades researching the effects of these flows and international trade on US and foreign economies. Understanding this complex and interconnected web is essential for us to anticipate the path of employment and inflation. Another important development in the 1970s was the increasing use of macroeconomic modeling, which greatly influenced the division's work. Under the direction of former division director Ralph Bryant, IF developed its first multi-country model. Always on the forefront over the years, economists in the division, many of whom are in this room today, developed increasingly sophisticated models, with each new generation expanding the capability to tackle the international risks and issues of that day. These models have proven useful for understanding how international shocks transmit through the economy and financial markets, for assessing risks and uncertainties through alternative scenarios, and for better comprehending the implications of various shocks for the US and the global economy. The results have informed research papers, board memos and briefings, as well as the risks and uncertainty assessment that FOMC committee participants receive in advance of every meeting. The IF division has also played an important role in responding to global economic turbulence. A prime example is the Latin American debt crisis of the 1980s. That episode required analytical thinking about the macroeconomic repercussions of the crisis as it played out around the world. Work by the division and by the IMF and other institutions led to the establishment of emergency facilities to prevent more dire financial outcomes. As global capital flows increased, other episodes of financial distress surfaced across the world, including in Mexico, Asia, and Russia. International capital flows and spillovers became and remain a recurrent feature in the division's analytical and monitoring work. The expertise generated through study and response to these global challenges proved invaluable when stress hit closer to home during the global financial crisis and then the pandemic. Both of those events required immediate, broad, and in many cases unprecedented responses to avoid disrupting the availability of credit to American households and businesses. The nation and the world looked to the Fed to lead in these moments. During the global financial crisis, when global funding markets came under stress, IF worked to establish swap line arrangements with several major central banks that helped restore stability in US dollar funding markets. And of course, during the pandemic, IF division helped lead efforts to expand the provision of dollar liquidity by setting up the FEMA repo facility. These periods of acute financial stress and uncertainty prompted the division to develop new tools and analytical products that could be used to understand and respond to the events unfolding on the ground. For instance, the division has devised new methods to measure and assess the effects of various types of uncertainty on economic activity, including new indexes that were built to track geopolitical risk, inflation, trade policy, and economic uncertainty. As we continue to navigate the current period of heightened uncertainty, this work is critical to understanding the quantitative implications of uncertainty shocks, certainly relevant today. So I'll conclude by saying that for 75 years, 9 Fed chairs and countless board members have greatly benefited from the guidance and counsel of IF staff, and not just when responding to crisis. This team helps to assure that we're well prepared for our international engagements by providing us detailed, some might say extremely detailed materials ahead of time, and often by traveling with us. IF staff are always welcome and productive companions in these and other endeavors. We benefit from the robust relationships that you establish and maintain with our global counterparts. So thank you to Beth Ann and to all the staff here that organized this wonderful event. And finally, thank you again to all the current and former IF staff for what you have done and continue to do to help us be a globally knowledgeable and responsive central bank so that we can deliver on our dual mandate for all Americans. Thank you very much.
All right, guys. Well, there it is. Not gonna lie, not a lot of substance there. But you always have to be prepared for these sort of things just in case he has, maybe you never know when Powell's going to wake up one day and he just has a little bit of a chip on his shoulder and he's got something he wants to say. It's kind of like most major news events. You oftentimes have like a forecast or an expectation of what's going to happen. And sometimes, a lot of times, it actually just kind of comes in as expected. Every once in a while, something surprising happens. But surprising is only as surprising as it is, right? If you think about it, it's like most of the time it's going to be something that's a little bit more, as James points out, maybe a snooze fest. Anyways, guys, we streamed pretty much all morning. We're going to wrap it up there. If you enjoyed the commentary, make sure to hit the thumbs up button, subscribe if you're new, and also make sure, if you haven't already, it's completely free to join. Make sure to join our Telegram channel. We'll drop the link here in the chat. We're posting market analysis on gold, Forex, indices, all on a regular, consistent basis, and it's completely free to join. Actually, we just announced our free webinar event as well. So do not miss the chance. Come join the Telegram channel. You can keep up with everything that we're doing over there. And we do giveaways, all sorts of good stuff. So take a second if you haven't already. The link is in the chat, also in the description down below. Okay, guys, thanks very much for watching. Have a great rest of your day.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.